sustainable future. From what we had yesterday, those of us, or those of you, because I was here actually, for those of you that were not here yesterday, we had a wonderful time launching the R3 lab, that is the risk resilience and regulatory lab. It was an interesting time for all of us that were here. And today, we continue with the Nairobi Declaration, the ESG. What is the role of Africa in sustainable future? What is the role of insurance going forward? Today, we have experts that are going to speak to us on this particular topic. I would like to welcome the Deputy High Commissioner, the UK High Commission, Mr. Ben Llewellyn Jones. You're welcome, sir. The CEO, FSD Africa, Mr. Mark Napier. You're welcome. Also in our midst, the Commissioner for Insurance, Mr. O.S. Thomas. We would like to recognize the presence of our guests from other African countries. There are too many, but I can mention the countries: Ghana, Uganda, Kenya, and Sierra Leone. Thank you very much for coming. To start this program, I would like to invite Zila Malia, Manager Risk and Resilience, FSD Africa, to give us a welcome and introductory remark on the Nairobi Declaration. So, Zila Malia, you're welcome.
Thank you very much, Abba. It's nice to see you all here today. For those joining us physically and virtually, you're welcome, and we hope that you will have an insightful session today. So all protocols observed, as we have done that already, Abba. I'd like to introduce you to the session today and quickly just help you understand what the Nairobi Declaration on Sustainable Insurance is. So in the last Africa Market event hosted by the United Nations Environmental Programme, PSI, the Declaration on Sustainable Insurance was launched, and hence the name Nairobi, as it was hosted in Nairobi. But this is not a Nairobi Declaration, it's an African declaration where we're bringing together African insurance leaders to commit to sustainable development goals. For me personally, I'll just give you a personal story about myself. And 20 years ago, from boarding school, we would go home, and every December, for example, and it will be all rain. And as time has gone by, that has changed. Right now, we go home, and all you can see are rocks and bare land. And that's just 20 years, and I'm sure this is not a unique story, because most of us are actually experiencing the same things. We are seeing the same effects of climate change. And looking at the different African markets, we're seeing extended periods of drought. It's not about when it will happen, it's actually about how often it's going to happen. We are seeing increasing temperatures. And this is not just an environmental issue, as it affects all other parts of our lives. So it affects health. The more we experience flooding, the more we're experiencing health issues and communicable diseases. The more we, for example, experience the long droughts, the more we experience hunger, and we can see the different parts, and the people who are experiencing hunger in the African population are slowly continuing to increase. And I was reading a report by the UNECA, and it said that if we continue at the same trajectory as we are in regards to carbon emissions, in the next 30 years, Africa will lose at least 30% of its GDP. So this is also an economic issue because it affects the economics. And at a smaller, at the macro level, when you talk about the smallholder farmers who are actually dependent on their farms to actually produce their daily food and basic needs, then this is a bit more personal for them, because with the different extended periods of drought, then that means it affects their livelihood. Something else that we are all seeing is that in countries that are experiencing drought for extended period of time, then we are also seeing insecurities immediately after the drought. And so this is not just an environmental issue. We have to think about the African people. We have to think about our population, because scientifically, in the next 100 years, if you continue the same carbon equivalent emissions trajectory, then with a 5-degree increase, Africa will actually not be habitable. So the debate is, we've not caused the problem. As you know, at the moment, carbon emissions are just 4% of the global emissions. But we are experiencing the impacts of climate change more than any other continent. This is our daily life. This is the flooding that we're experiencing in Lagos, or the droughts that are being experienced in the northern part of Nigeria. So we actually see the effects. And we understand that the African insurance industry is key in helping the communities in the African population, because we need to adapt, and adaptation is going to be from transferring these risks from the different communities, from our communities to a different level, to a macro level, and to international levels through insurance. And we believe that using the collective might of the African insurance, we will definitely be able to make changes in our communities. We need to take the different data and contextualize it to what applies to us, and make changes accordingly for the future generations. Because if we don't make the changes now, then we will not have any other opportunity. So it's more than just an environmental issue. So today we'll be hearing from different experts, insurance leaders here in Nigeria. We have signatories who've signed on to the Declaration on Sustainable Insurance, who will be telling us what they're doing, and how we can actually practically apply sustainable insurance in the different companies and the different markets. I'll quickly take you through the agenda. We'll have the opening remarks from, we'll start with Mark Napier, Chief Executive Officer, FSD Africa, and then we'll move on to Ben Llewellyn, Deputy High Commissioner, British High Commission, and then we'll have Thomas Olorundari, NAICOM Commissioner. So please help me welcome Mark Napier. Thank you.
Morning, everybody. Thank you for coming. Protocols observed. Thank you, Zilla, for your introduction. And thank you for your time in what's an increasingly important discussion topic. Very grateful for everybody for coming. Very grateful for the Commissioner for being a partner with us on this important topic. Thank you, Ben, for joining us this morning. Thank you, Bolo, for also coming and being with us. So you'll hear from experts on the role of insurance companies and the insurance industry on sustainability. So I'm not going to go into too much detail. Suffice to say, it's about protecting households and businesses and indeed governments from the inevitable risks of climate change. It's about incentivizing investment that would, so in other words, de-risking in order to create the resilience that we need to protect ourselves against climate change. And it's also about providing investment capital to the right kinds of business as well, that would create a more variegated kind of green industrial future. And that's kind of where we're all heading to. It's a future in which green is fully integrated into the way we think about economic development. So it's not something that's just over there. It's fully integrated as part of the way we think about the way we think about life. When you look at the various net zero pledges that there are globally, you look at the Net Zero Insurers Alliance, for example. or the Net Zero Asset Owners Alliance, those obviously being very critical for this particular gathering. Insurance Alliance, there are 22 insurance companies, which is quite a small number if you think about it. If you think about the number of insurance companies around the world, there are only 22 actually that are part of this net zero pledge, which is intriguing. When you think of 16 companies in Nigeria, listed, registered insurance companies also, and only 22 globally. There's actually only one from Africa out of those 22, which is ICEA Lion from Kenya. And then you think about the Net Zero Asset Owners Alliance. They're doing a little bit better, 71 asset owners when I looked last night on the website. Again, only 3 from Africa, which is Old Mutual, Prudential, and the Africa Risk Capacity insurer as well. So only 3 out of the 70 asset owners are part of that alliance. And it kind of makes you ask, it begs the question, well, why is that? And is it just the case that the concepts of net zero pledges for Africa is just very alien? It's just something that doesn't happen here, or is it that they just don't believe, we in Africa don't really believe that the climate risk is real? I think we do have to recognize that there are market structural reasons why it's very difficult for African financial institutions to sign up to these quite hardcore pledges. If you're trying to sell out, for example, of a carbon-heavy stock, and you're an African asset owner, you can't simply easily buy something else because there aren't that many listed companies that you can buy as an alternative. And so, and very often our listed companies, the companies that are listed on the stock market are actually just very carbon heavy, aren't they? They're very often oil companies or metals companies or those sorts of things. So it's not as easy as if you're French or German or American. You can just buy something else to hold. You can't do that here. So, and then of course we have the issue about government crowding out. It's just a whole lot easier to buy government securities, as we all know, and that really reduces the incentives to do anything innovative around developing new strategies that are perhaps climate oriented. So there are very significant differences. We're beginning to see some quite interesting regulatory changes. I was in Ghana at the beginning of the week, so I was interested to hear about the new regulations for pension funds, requiring pension funds, this is not specifically a climate issue, but it is to do with the crowding out issue, but requiring pension funds to allocate a significant proportion of their holdings in respect of 40-year-olds and lower towards non-fixed income securities, which is great. So it means there's more capital that's available for more innovative fund structures that could be potentially climate-oriented. So the beginning of some sort of regulatory change, but there are market structural reasons why net zero pledges, which are quite hard are very difficult for African funds to stick to. But nonetheless, it does seem that the incentives we're missing, the incentives aren't that strong for African financial institutions at the moment, which I think is a pity. And I think we're missing an opportunity, particularly around knowledge sharing. I think it's always a shame to pass up on free advice when you can get it, and there are plenty of institutions who would be willing to support a kind of transition towards a better understanding of what ESG means, or indeed net zero. But I think it's also a missed opportunity to start to develop, and this is really the message for you today. It's a missed opportunity to start to develop differentiated strategies that could single you out as a progressive player in the market, in a very fast-changing market that will undoubtedly see some players go to the wall. So in 10 years' time, 20 years' time, there will undoubtedly be a lot of losers in this game. And so at some point, you need to start on a journey. And I guess that's our message perhaps today with the Nairobi Declaration. I'm sorry, perhaps we should call it Nairobi/Lagos Declaration or something like that. I realize there's a problem in calling everything Nairobi, but you get my point. if we could, but you do need to start somehow. And I think that Nairobi, when you look at, if you can imagine a kind of scale of intensity around sustainability, disclosure, and things like that, I think Nairobi Declaration and the UNEP PSI principles are really a starting point. It's a very comfortable, useful, practical starting point. Then you can go through the ladder from there to full-scale ESG, and we can have a discussion maybe next year about whether we need to regulate for ESG, Commissioner. But anyway, that's a different discussion. So UNEP PSI, maybe then ESG, and then eventually net zero pledges as well when there's a broader understanding of the opportunities that are there. So just to mention two things to give an illustration of the kind of things that we're talking about. I'll mention very briefly, because we hope that there will be a kind of presentation on this next week and more announcements. But we're working with the Lagos State government on flood risk insurance. So obviously this is a massive, present, existential issue for Lagos. And again, talking to colleagues last night from FC4S, Lagos, and also from the Nigeria Climate Innovation Center, you know, the pervasiveness of this issue around flooding and the way it impacts not just people's daily lives, but also the financial sector's daily life in terms of your exposure to assets that are vulnerable to flooding. It's huge, that pervasiveness. And so we are working with the Lagos State government on that. There doesn't seem at the moment to be any clear role articulated for the private sector in supporting building flood resilience. So that's something that we would sort of watch this space really for that, but it's something that we're very concretely involved in at the moment. And the other thing I just wanted to put on the table is that we're working on, you're probably aware of the Task Force for Climate-Related Financial Disclosures, which is the climate disclosures that financial institutions are slowly being required to make. We're now working on the Task Force for Nature-Related Financial Disclosures, which is the next one. Nature, thank you, related financial disclosures, which is really all about saying, are you, as a business, exposed to natural risks? Answer yes. Anybody who lends or insures against agricultural risks, you're exposed to natural risks. Water, forestry. When you think about most of what you do, there is a very strong nature dimension to that. And actually, just as an aside, if I'm inclined to think if we'd started talking about nature 15 years ago rather than climate, particularly, as Zilla was saying, in an environment where most people on this continent believe that they're not really contributing to emissions, which they're not, but if we'd started talking about nature, then I think we would have made much more progress around climate-related issues, because I think it's just that much more real and present for all of us, and I really feel that very strongly. But the Task Force for Nature-Related Financial Disclosures is a very important thing for the insurance industry and the role that insurance can play in strengthening the resilience of the economy as a whole. So that is kind of just a bit of a message for me. I do encourage you to think seriously, if you're not already thinking about it, to think about signing up to the Nairobi Declaration. There's very little obligation involved. There's only upside. And as I say, it's potentially a starting point on a journey of discovery that could actually prevent your company from becoming a stranded asset in the jargon. But also, I think it will open up all sorts of valuable networks for you, and I would strongly endorse your consideration of that. Thank you very much, and thank you for coming.
Thank you very much, Mark. I think we all here, apart from all the impacts that we are seeing, there are also opportunities for us as the insurance industry. Our next speaker is Ben Llewellyn, UK Deputy High Commissioner. Thank you. Please help me welcome Ben Llewellyn. Thank you.
Well, thank you very much. Good morning. I'm Ben Llewellyn-Jones, I'm the British Deputy High Commissioner here in Lagos. I'm currently a diplomat, but briefly, before I was a diplomat, I actually sold insurance, so I'm not completely masquerading in your midst. I fear that you would never employ me now, so I'll stick with diplomacy. But it's great to join you here, and for those online, great to join you as well. And I'll just speak briefly, really, because I'm conscious that experts in the room. And after what both Mark and Zilla have said, I'm actually quite keen to hear some of the practical solutions to some of the issues that will be addressed, and of course to hear the Commissioner himself. I know, thank you for giving me your time, so really great to have you with us. So I'm based here in Lagos. I'm the Deputy High Commissioner responsible for all of our engagement across Nigeria. But I'm going to start where I think Mark just about finished, which is if you're in Lagos, climate insurance feels like a very real and necessary thing. So if there's more than about 6 to 7 hours of rain, just to give you a practical example, my house floods. And I live in what's quite a nice area in Ikoyi, and respectfully have the means to manage that problem. 6 to 7 hours of rain for many people is an absolute catastrophe. And right now, there are not many practical solutions for them, save for to try and find somewhere else to go, and that's not very easy. So I think, we're all living with the practical impacts of climate change, but some people are living with them in a very real, very visceral, and frankly, unavoidable way. So climate insurance is not simply something in the abstract, and those 22, I think, companies are a great start. It's something we need to make real, and I hope, not just with our conversations with Lagos State Government, but also with others, we can reflect upon what climate insurance can mean, and indeed what the Nairobi Declaration can mean practically. The second thing I'd say is when we look at COP26, which occurred last year, which feels quite a while ago now, given what's happened in the world, there is a risk, another risk, that we lose sight of the strategic, the big picture. War in Ukraine, economic crisis, plenty of other things that could distract in the short term, and we understand why that happens. But actually, when you refocus and look back to COP26, you realize COP26 is dealing with the strategic issue. There will be an energy transition. There has to be. There will be, and there are impacts of climate change. The real question is what we do about them. That's really the only question now. And I think about those two issues. Initiatives like the Nairobi Declaration allow us to be practical, to find a way ahead, to be and remain strategic. So I hope, really hope, and not just here with the Nairobi Lagos Declaration, as I'm sure it will be renamed shortly, we find those practical solutions and we make that happen. And then finally, from me, really, as I say, I really want to hear from those experts. I think what this shows, and what FSD Africa shows as well, is the UK commitment to that long-term strategic approach and to making it happen. So I'm delighted not just to have Mark here, to have the team engaged across what is 2 weeks' worth of engagement. We're going to stay longer, actually. We're going to try and make that happen, but nonetheless. Because I think what it shows, really, to be honest, is we're putting not just our money, but our expertise, our thinking, our influencing, where our mouth is, and working with partners to try and find solutions, because 22 is not enough. It needs to be 220, 2,220, I don't know. But certainly what we need to do is grow that support, grow that cooperation. So on behalf of the UK and Nigeria, British High Commission, just fantastic to be with you, fantastic to learn from you. We're ready to support you in your efforts. Thank you very much indeed.
Thank you very much. For those who might not know, we are actually funded by the UK Aid, so it's nice to have the Deputy High Commissioner here and the full support of the High Commission, so thank you very much. Next, we're moving on to Thomas Olorundari, Commissioner NAICOM. As you know, we cannot make progress if we don't actually work the regulator, so we are happy to have the regulator with us here today. So thank you. You're welcome.
Thank you, Mark and Ben, friends, colleagues. First, I want to thank you for yesterday. It's been quite exciting. Today is another day. And I want to believe that from all the things that you were doing, of course, we discussed the issue of Lagos State yesterday and trying to find a place for the insurance sector. Of course, such risk cannot be on the basis of what we used to call pay-as-you-go. That is deploying taxpayers without involving the private sector. And I think probably in your engagement with the state, we quite appreciate emphasizing the need for the private sector to be part of it, and especially the insurance sector, so that let's see how that will evolve. I'm pleased to welcome you to the mini conference on sustainable insurance. This conference has brought together stakeholders in the African insurance market to deliberate on modalities to facilitate attainment of a sustainable future. We are indeed grateful to our development partners, the Financial Sector Deepening Africa, FSD Africa, UKAID, and the United Nations Environmental Programme for the invaluable support. This conference also aims to explore ways that insurance can play a significant role in helping African countries achieve the United Nations Sustainable Development Goals, UN SDGs, in terms of economic growth, social inclusion, and environmental protection, and ensure sustainable development in the African insurance sector. It will appear that the role of insurance has been somewhat relegated within the context of the SDGs. This is because the current indicators likely do not capture specific insurance-related metrics. To be able to better assess the role of insurance and motivate the insurance industry to contribute more to the SDGs, more consistent and disaggregated data collection is recommended. It is, however, an acknowledged fact that the insurance industry performs a very critical role in promoting economic, social, and environmental sustainability, and can indeed help countries achieve the UN SDGs. The insurance industry helps protect society through risk prevention, risk reduction, and risk sharing. The industry therefore plays an important role, at least in 9 of the Sustainable Development Goals. And amongst these ones are no poverty, reduce inequalities, zero hunger, good health and well-being, gender equality, decent work and economic growth, industry innovation and infrastructure, climate change, and partnership for goals. In addition, the insurance industry also plays an indirect and supporting role in 5 of the SDGs. And by these, I mean quality of education, sustainable industries, innovation and infrastructure, reduce inequalities, partnership for goals, and sustainable cities and communities. Therefore, the insurance sector holds the potential for enhancing sustainable development with the 2030 agenda. Ladies and gentlemen, ESG issues constitute a shared risk to insurers, businesses, governments, and society. Some ESG issues such as climate change, pollution, and ecosystem degradation have various ramifications. Some of these issues are now considered as likely to be financially material to the success of organizations. There is therefore the compelling need for innovation and collaboration. The 4 principles for sustainable insurance formalize the commitment of the signatories to ensuring decision-making along ESG criteria, raising awareness with clients and partners on ESG criteria, collaboration with governments and regulators to promote action on ESG criteria, and accountability and transparency of progress in ESG implementation. The corresponding list of possible actions provide a common anchor and framework for the insurance industry to manage ESG issues. This is expected to enhance the industry's contribution to building resilient, inclusive, and sustainable communities, and economies. On the regulatory side, the current environment is increasingly becoming complex. This has heightened the need to ensure effective supervision as well as resolve broader policy challenges, such as inclusive economic development, sustainability, climate risk, and digitalization. Insurance regulators, therefore, have a vital role to play in sustainable economic development. Through regulatory and policy initiatives, regulators can guarantee that their insurance jurisdictions offer the essential range and variety of products and services that support the SDGs. Supervisors can also act as conveners of key stakeholders to build partnerships, just as we're doing, to coordinate insurance solutions, especially when faced with multifaceted risks, such as climate change and pandemic risks. As I conclude, ladies and gentlemen, on behalf of the Nigerian insurance industry, I wish to thank you all once again for joining us. I also wish you a successful deliberation. Thank you and have a good day.
Thank you very much. I must say that NAICOM has been very supportive, not only for this and in the sustainable insurance agenda, but also the whole of this week. We've had a number of meetings and sessions, and NAICOM has been there all through. So thank you very much, and thank you to your team as well for making this happen. So we're moving to a very interesting part of the session where we'll be hearing practical examples of how some of the companies here in Nigeria and Africa are practically incorporating sustainable insurance. So we'll have a panel discussion. It will be led by Elias Omondi, Senior Manager, FSD Africa, and I'd like to let Elias introduce his panel. Thank you very much. Over to you, Elias.
Good morning, everybody. Good morning. I don't feel the energy. Right? Is it because of climate change? Let me know if it's because of climate change, because we need to get some energy, though the temperatures have been increasing. Like, it's quite interesting. I was having a conversation and somebody told me that ESG and climate change is a scam and it's a Western affair. And I kind of thought about it. And one of the things that came through my mind is that, look, Africa will get 30% poorer by 2050. Now, the most challenging thing is, I know everyone is just saying, oh, food prices, right? It's not only Nigeria. In where I come from, Kenya, everyone has been fighting about the food prices, right? And it's quite interesting because we need to kind of look at it differently. We need to act right now. We need to kind of get ourselves and roll ourselves into this particular journey. So these notions basically needs to change because this science is not politics, right? Most of the time we say, okay, fine. It might be a political agenda, but you can never defy science because climate change is real and we have to act on this. So we are going to have a very interesting panel, and I just want to kind of call upon my team to join me on stage. So we have a very interesting panel of discussants in this particular meeting today. So I want to call upon Leslie Ndlovu, is the CEO of African Readiness Capacity. Interestingly, African Readiness Capacity is one of the signatories of the UNPSI and also Nairobi Declaration. Also, we want to call upon Rasidat Adebisi, right? Quite an interesting name. And unfortunately, she did not tell me that I needed to have something in green. So, but my blood is flowing in green. So just know that I'm not, it's nature. Great. And also I want to call upon Adetola Adebai, right? Executive Director, Leadway Assurance. I know we are having one of our panelists joining us online, right? Kasim Hamza is the Group Head Underwriting and Claims. Hey, Kasim.
Sorry,
it's good that technology can enable us to wave wherever we are. And Kasim will be telling us where he is located. Very interesting times indeed. Right, so I just want us to go straight to this discussion. I know Leslie might have been held in traffic. He had to fly in from Abuja. So maybe he will be joining us as we will be proceeding. So it's interesting, and let's get into the discussion. Thank you. Great. I feel like I want to start with something that is not in the room, right? We want to check whether technology is working. I'm being told that I need to sit in between the ladies. That's great. I'm not afraid. I'm relaxed. Right, so I want us to test technology, and I just want to call upon Kasim, and ideally, okay. All right. Let me try again. Let us go. Maybe analog. Let me start with the people in the room.
I think you can hear.
Right. So maybe.
Yeah.
Kasim, can you hear us?
Yes, now I can hear you. You were cut off for a while, Elias. I can hear you now.
Now you can hear me. Great. So we were just trying to check whether you will be in the room, and great technology will allow you to join us. So I just wanted us to start from a very light note. From your own perspective, what does sustainability mean to you, and how have you been looking at this particular agenda from your company's perspective?
You're starting with me, Elias?
Yeah, I want to start with you.
Yeah, yes, with you.
Yeah, okay, thank you. Thank you for putting me on the spot. Thank you, Elias. Thanks, my fellow colleagues, distinguished guests, and thanks for the opportunity. Apologies, I can't be there physically. I would have loved to have done that. But coming to your question, Elias, look, for us, I'm talking from a reinsurance perspective, as the wholesaler in the insurance supply chain. we immediately recognized and appreciated the role and purpose of embedding ESG into our business operations. That this was, of course, part of a much bigger global initiative. We understood that with the PSI. And where the PSI, of course, makes a statement, something to the effect that it strengthens the insurance sector's contribution as risk managers. Insurers, that's the one leg. I like to see it like that. Risk managers, insurers, and then investors is our other leg towards building a healthy, safe, resilient, and sustainable communities and economies, importantly. So I want to bring in, when I was thinking about this, also because I've been working these past days on the February 2022 McKinsey insurance report, and this was a global study. And the report, quite correctly, and so we feel vindicated in a way, excuse me, that it says, how can insurers individually and collectively reframe the role and purpose of insurance in society? And I think that's the relevant question for us here. And they answer, and if you'll allow me, please, just quickly, because the way it's so succinctly put, I think it's very important for us and for members in the audience maybe to consider and think about this. So if you'll allow me just to say what they say here. They say, make environment. They're saying, how could we reframe the role of purpose of insurance in society? They answering, make environmental, social governance considerations a core feature of the business model. More and more companies and their investors are recognizing ESG as a strategic priority that involves significant business risks and opportunities. As an illustration, they say, consider climate risk, and a lot of that has already been discussed with the previous speakers. An area in which evidence is mounting that property and casualty insurers will soon need to revisit their business models. So we're going to be forced to be doing and thinking about this. However, they say, while many insurers have begun to incorporate climate risk considerations in their investment processes, new product launches and underwriting processes are mostly unchanged. With climate risk mounting, insurers have an opportunity to broaden the relevance of the industry's traditional risk transfer to explicitly address risk mitigation. I would argue for Africa, not just the mitigation, more the adaptation as well. And then finally, Elias, if you'd allow me, because they give us some advice, 5 simultaneous actions can make this happen. And I think it's really good advice. That's why I want to share it. We got to stress test total exposure against projected climate hazards. That's for all of us on the continent. We got to build resilience and rebalance our portfolios, our book of business. We got to help organizations mitigate climate risk. And I think a very important role for us there because of the risk management side that we are highly capable and have serious competencies in that regard. We got to create innovative products to address climate-related risk. I'd like to touch on that if an opportunity arises later. Create innovative products to address climate-related risk. And then lastly, and revise investment strategies. Forgive me, but I had to quote this because, to be honest, I simply could not have said it better, so sweetly and succinctly. Thanks, Elias. I hope that contributes somewhat.
Thank you, Kasim. And in fact, when you were basically talking about the rebalancing of the portfolio and the balance sheet, and ideally you joining us through technology, Leslie was running through the systems across Lagos to join us. So hopefully, and finally, we've managed to get Leslie joining us. So a round of applause to Leslie. Love. Right, so I just want to now come to Rasidat. And I know Kasim have talked about rebalancing and looking at the portfolio issues around innovation, particularly on the product perspective. And what I wanted to just get from you, from an organization perspective, what do you consider important, ideally on the ESG factors within strategy and also within the business decision making? What do you really consider important when you look at this particular component?
Thank you very much, Elias.
And maybe you can also give up, you can say what you do at AXA.
Oh, okay, super. I think maybe first of all, I'd like to start by just challenging Mark a little bit that you've only focused on African companies who are signed up to the alliances, but there are also organizations who are part of groups that are signed up. So AXA, for example, is signed up to the whole index. We are very particular about it. Like you introduced me, I'm Rashida Tadebisi, I'm a Chief Client Officer at AXA. And a big part of my work is to ensure that all our lines of businesses continue to drive and achieve, the ambition and the purpose of AXA. And our purpose is very simple in AXA, is to act for human progress by protecting what matters. And what matters keeps changing depending on the life stage you're in, depending on the economic situation. And it means that we don't just think about today, we have to think about tomorrow. So if we bring that into sustainability and the conversations, I think what's clear on our side is that we first of all look at it from three angles. We're an insurer, we're a corporate organization as well who is an investor. So as an insurer, as an investor, and more importantly, as a role model and a corporate citizen, how do we look at sustainability? How do we contribute? So your key question to me is about being an insurer and the kind of products that we're engaged in. A lot of people are very clear that the corporate side of the market, in Nigeria in particular, maybe in many African countries, are more developed because penetration rate remains low because we don't have a lot of all the individuals covered. So our personal lines are significantly low. And people have told us all sorts of things. If you read the EFINA report, it says that people don't see the value of insurance. They don't understand how insurance, is relevant to them. Some people think it's quite expensive. They think it's for rich people. And I think even worse is that they actually face those risks. They are managing them, but they don't have that appreciation that insurance can help them manage those risks. And as insurers, we're not necessarily being the most intuitive to the clients as well. So they can't access us in certain places. We're not engaging at the level that they expect us to engage. So when we look at sustainability, we're looking at how can we impact. The social side has been very important for us in AXA. I think more than 5 years ago, we started with the process called emerging customers, because we saw that as the world is evolving, we are seeing the poverty index continue to be high. How do we help to create safety nets in countries where there's no safety net? And we know that there's no safety net in Nigeria. The government itself is challenged financially, and in the long run, everyone here in this room, if you're in Nigeria or in many countries, you are the safety net. If something happens to someone, they call you up. You have to find the money. So for us to help to improve and impact from a social perspective, we had to do a lot of research and then go into creation and look for products that are more sachet-sized, more sequenced. So when I say sachet-sized, the pricing, it has to be something affordable. So for us in Nigeria, we think about products that are less than $1 or about $1 a month, because we know that people earn maybe between $5 to $10 a month. So how can we help them? When you think about half of our population are actually living at a very low income level, then we need to create solutions that can protect them. Then we need to think about the prioritization of those risks that they face. Can they afford a product that covers all the risks? No. So we start with the biggest risk that they face, healthcare. How can we help from a health perspective? How can we make sure that they're accessing the right facilities, getting the right drugs, and not buying fake drugs? So I think some of these things are some of the actions we've had to take and to make sure that we're relevant. And that has a social implication. Why? Some of the guys in the low income brackets, when they take loans, they live on a daily basis. So if they don't make income in a day, they can't feed the family, they can't pay their loans. So we need to create solutions that helps them to protect them when they're ill, for example. So they still need to meet their obligations. So some of the products are products where you want to make sure that they can actually afford to take care of all the other bills, take care of the family, even when they're not able to do business that day. So that's what we look at, sort of sachet sizes, but that addresses their biggest needs. And then as they increase in income size and move along the ladder, they're not going to be micro forever. We seem to have a view in our countries that micro is something, normal insurance is something. You are basically assuming that everybody is going to be micro forever. So how do I evolve from micro to, is it major? I'm not sure, but perhaps to the traditional insurance space. So we need to be able to create, a bridge that ensures that wherever you are, you are protected and you can move along the way. So that's how I see social impact from a product perspective. But perhaps, I mean, I think we're going to address a few more questions. Of course, our responsibility.
that can be part of the solution. I view signing on to the declarations or joining the alliances and the partnerships as an important way to really leverage the participation of each individual, which is why we've been very signed on to as a result. However, maybe if I may offer a point of or controversy, however you want to term it, usually the declarations are written by PhDs, and no offense to the PhDs in the rooms, but then it's hard to then translate what's written in those statements into how it actually affects your business on a day-to-day basis. And one of the things that I've been really advocating for is to say, let's unpack all these things and have them in a way that people in the business, somebody in the underwriting team, if you say you need to be sustainable. How does that really translate to business opportunities and to the workflow we see every day? And of course, if we solve that, then we will achieve the impact that we want to be. And it's really important for us to do this because the scale of the challenge is enormous. Thank you.
Right. Thank you, Leslie. And I really appreciate what you've brought up. That, we look at this collectively, and ideally from an African perspective. I remember during my younger days, we had the rainmakers in Africa. I don't know whether they still exist. and I know maybe they still exist, but I don't know whether they've managed to tackle climate change. But let me jump to Adetola, and I just wanted you to kind of give us a perspective in terms of your journey as Leadway for mainstreaming sustainability considerations, or ideally just tell us how do you apply an ESG framework, and maybe from what you as an organization, what Leadway as an organization has been undertaking. And maybe you can also tell us about yourself.
First of all, I'm going to start with the Leadway angle, and I think possibly we'll also address what Rashid said and what Leslie said as well. For us as an organization, ever before it became ESG, it was about corporate social responsibility. It was about the balanced scorecard for an organization in terms of how it manages its impact within the society, whether in terms of poverty alleviation, whether in terms of how it engages the regulator, the wider environment, or whether in terms of its own self as an entity. With that in mind, we have been, I'm going to pick it from the environment side. No, I'll come back to the environment side. Let me start with the governance side. At the governance end of things, you would find that us as an organization, including a number of entities, have to follow certain regulatory guidelines anyway, to ensure that we follow the issues of diversity, equity, and inclusion, as it's called now, and all that about, gender balancing, fair pay, how we also relate with the environment. For us, it's a journey that started years ago. We're not official members, but we're not official members for the fact that we also want to do things that we believe we can realize, not just something that we pay attention to in terms of just having it on paper. Indeed, the paper aspect of it eventually started as well. So as a long journey, we came about policy, and we ensured that it was something that also show the mesos and the macros of the economy, and I'll also come to that when I roll back. So moving into the social aspect, we've always been a socially responsible organization in the sense that we are possibly one of those companies that have branches and agency offices across the country. Sometimes the tendency for insurers is to look at the profit motive only, rather than look at the need and the access. So for us, it's not just about, yes, we want to make money, but we also want to be available to the public. We want to bring insurance as part of a risk management financial protection tool for customers. In doing that also, moving forward within our environment, when it comes to the more challenging part of it, which is the climate issues, it's almost like maybe what Leslie said, one may end up being a little bit controversial, because you have to, it's good to say that, yes, we need to protect the environment, we need to take care of, greenhouse gases. We need to ensure that we write risk, or we build that into, just as you've said. into underwriting considerations. But the macros does not support it, which is possibly where regulation and government involvement comes in. And why do I say it really doesn't support it? The structure of the Nigerian GDP, for example, and I see that with a number of African countries too, the structure is tilted towards natural resources, raw materials. It's not tended towards manufacturing. So when you look at GDP, and then you look at where insurance is going to follow, because insurance does not follow non-asset holding, non-liability responsibility. So if you do not have assets to protect, neither do you have a liability to respond to, first of all, you really do not have something, quote unquote, to insure. But luckily, a number of us, well, all of us who own cars have a liability that we must respond to. About the basic compulsory insurances like motor liability insurance. So as you look at what the economy is, what insurance responds to, you then have to ask yourself, carefully, we have it within our policy. We're going to be responsible about the underwriting. But if the bulk of the premiums within the market is from fossil fuel, crude oil, and also from refineries, and also for petrochemical-based manufacturing entities, and equally, in addition to that, you then take it further again and say, what do we do more of? So we're then going to trade. So you're looking at the structure. And, you know, as we're talking about climate also, there's the land aspect of climate. And the land aspect of climate also focuses on what is the input into agric. Agric is 23% of our GDP. And agric is where we also do, rather than do indemnity-based insurance, we do index-based insurance. But there's still the climate aspect of agriculture as well, that we as a country, we have signed up to also reduce the greenhouse gases that also relates to agric. So as you begin to decompose our GDP, you begin to ask yourself as insurers, what then are we supposed to do? It's an existential threat to our industry in Nigeria. If we take off the insurance of agric, for example, take off the insurance of oil and energy, take off the insurance of aviation, then we basically just crippled the industry. So we really have to ask ourselves, and we as an organization carefully have to say to ourselves that we will continue to do what we're doing as an organization, but to officially sign up begins to test the moral integrity of our institution. And that is why we have not gone for the things we are doing, you know, to ensure that at least we face reality and we do the ones we can. For the bottom line, we're careful about it. And again, back to the micro, which I must mention. Like insurance is about access, about need and about access. But a lot of people also do not understand insurance because it's such an esoteric subject matter for quite a number of people. But what you find is that, and thankfully with the regulator, we came up with products, whether on the life side or on the personal accident, which is, you know, quite cheap. And we have a combined product that responds to also the need of the poorer customers, so to speak. Because we don't just want to sell insurance, we want to listen to the customers, we want to listen to their needs. So we do this within our organization, speak with the drivers, speak with people who have families at the lower end, and just try to understand what they need. Now, in doing that too, we need to educate. So what we did as Leadway was, in the process of educating the public, we took on a mobile office. So our mobile office is very green. It's solar panel, because we cannot depend on generator going around the country. So we decided to have a green vehicle, to do these campaigns. And we found that when people understand what insurance is, they actually take it off. But there's also a limit to insurability, because of the fact that once your income level is below a threshold, no matter how cheap the premium is, unless you give it for free, some people still cannot afford. And that now brings us back to, again, the social insurance aspect of it. How do we work together with government to create a social insurance within a national risk management framework that addresses the people at the lower end of insurability? Thank you.
Right. Very interesting comments, but I want Rasidat and Kasim to kind of react on that. But maybe before they react on that, I was just looking at McKinsey statistics, and it kind of mentioned that cows are the third largest emitters of greenhouse gases. And I went back to the village and I was telling my father, we need to sell all these cows. Then he told me, are you mad? Because I was like, okay, we need to do away with this. They're emitting green emissions, green gas emissions, and we want to protect the environment. So let me get some reaction from Kasim
I do like the one about the cows, really. but I think sometimes this is where we have to keep learning. So maybe the first underlying point to make is that we're on a marathon journey. So if anyone thinks it's going to happen overnight, it won't. And the reason is that in more developed economies, they've actually had a lot more years to evolve. And therefore, the developing economies will still need to take their time. I think this is where the point of net off or net balances of our activities comes into play. So if the cows are emitting certain things, what are the other things you're going to do to net it off? Right? Because, not everybody's going to become a vegetarian. I'm not sure that in Nigeria it's going to be an exciting one, because some people will think that who did they offend? Why they cannot eat meat, and not to take offense to people who do respect, the animals and don't want to kill them. But here, I think it's even worse. Some of the wild animals are all gone. We don't have a lot in our zoos. There's a reason for that as well. So I like to say that from a corporate perspective, right? I think it should show us that there are opportunities and challenges. If what we do mostly is oil and gas and all the large risk and all the things everyone in the world is saying is affecting us negatively, then it means that there is a risk to ourselves as a whole. And what actions are we taking to build that and to also help them on that journey? So my biggest concern actually is that as organizations, when we see that this is what is paying our bills today, we don't want to rock the boat. But financial institutions and insurers have to rock the boat. Because if we don't rock the boat, the companies will never have any impetus to change. And we also need to be able to create incentives for those who are actually making change. And I asked some people questions. A lot of the large international energy companies are changing their names. I said, it used to be Total Oil and Gas when I was growing up. Now it's Total Energy. Isn't that a signal that something is happening? And it doesn't mean they're not actually still in oil and gas, but it means that perhaps they're evolving their business model. So how are we as insurers going to start the education and collaborate of our clients? Start to show them the impact and start to help them be responsible. We usually ask them for health and safety, documentation. They talk about, environmental impacts of some of the drilling and all of that. So what else is going to be expected of this organization so that they start thinking about tomorrow? Because if we don't take those actions, what will happen is that there'll be higher losses happening to us. So we'll be paying higher claims. We'll still have the challenge of charging the right premiums, right? Because the premiums are still going to be reinsured in the international, maybe London market. So that means that, we might think we're collecting more money because of our devaluation, but we're collecting less money for higher risks, and we're not getting prepared for tomorrow. And the worst thing about sustainability is when you don't prepare your country, your heritage for the next generation. So the way I see sustainability is that you inherited a platform. How do you improve it and get it future ready for those who will take it after you? So if we don't start the organizations on that journey of saying, let's even start to make a change, what are we going to do differently? Can we drill in a much more efficient way? Can we make things better? Can we start to employ people? Can we start to educate? Can we even invest in other things that will help us plant trees? which seems like the most silliest things, but it makes such a big difference, when I think about the comments Zilla made where you can't see trees anymore, they're going. So what are we doing to deforest, deforestation issues? How are we combating that to help us improve whatever negative impact we put on the climate? So I think there's that responsibility. One of the key reasons why I remain in insurance is because I truly believe it's a noble profession. There are very few professions where, maybe apart from the doctors, where you're able to actually impact people's lives positively and still make money at the same time. And, really, really help other people when they are in unexpected situations. It's insurance that can do that. So if we don't start to take action, there will be that issue. And of course, we need to develop new business models and also start to insure all the other risks that we see by helping them to even become more responsible and insurable. One of the biggest issues people identify to us is that in Nigeria, I do not see insurance in action. When they say fire, you never hear about insurance companies paying large amounts of claims. They usually hear the government has donated this amount. This state governor donated this amount. It's always about the government donating. Only, I think, the highest we've ever seen is during the NSAS events that we had, where I think the industry has paid anywhere between 9 to 11 billion. And I'm not even sure we have flogged it enough in everybody's faces and help people to understand what that means. So if we also don't help create insurance in action, where people see it in our countries, we just won't really move forward. So perhaps, Kasim, do you want to just jump on that? Thank you.
Yeah, thanks. Can you hear me, Elias?
Yes.
Yep, we can hear you.
Okay. Yeah, thanks for that, Rashida and Tola. I think a lot what you're saying resonates. But from my perspective, we've thought about this. Of course, we've been involved for a few years now. So the way we try and think about it is, and if I can share that, we look at sustainability, and there are probably 4 pillars here that are very different, but they all stand to hold everything up. And so if you'll allow me, the first one, to my mind, relates to how do we as organizations, because sustainability is a big word and it means lots of things. So the first one is, how do we, in our very own operational dynamics, deal with our overall emissions in the way in which we as businesses are operating? What is that? All our staff activities, our raw product inputs, all our road and air travels. And yes, that includes the FDA PSI conference in Lagos, all our light power usage, printing, paper, ink. And how do we account and seek ways to offset, as Rashida has been mentioning, and make ourselves net zero? So the starting point, for example, is for us as CIRI, this is what we've been doing, is a concerted effort and drive at the staff level to start tree planting. Now, we know that the challenge, when you look at it, what you need to do with offset on trees, it's a huge task. So too many. So we simply put our heads down and we do whatever as best we can. It's really a big, big task, and we are all, to my mind, way behind. If you do the calculations of how many trees need to be around, so it's not just trees. So we need to look at many more offset sequestration strategies, and I think a lot needs to be investigated. This is Africa's challenge and opportunity, I feel. The example is, and you can Google it to check, the challenge to make the Great Green Wall of the Sahara a reality. The protection of phytoplankton in our oceans. They're really responsible for a lot of oxygen on our planet. And global money should be put aside for these projects. The second sustainability pillar, to my mind, relates to and deals with our continent's own vulnerabilities. The need for us to build resilient cities, resilient communities, and I think Rashida and Tola were hinting at concepts of microinsurance, in fact. And here is where I've been saying to Elias, I've got these coins, and I say coins because it's 2 sides of the same coin, and you then have risks on the one face and opportunities. So where we have these risks, for us as insurers, there's an opportunity. Given our poverty and inequality challenges, let's not even start talking about unemployment. You won't believe the unemployment levels here in South Africa, in the country that I live in and that I'm a citizen of. We must be challenged to make insurance accessible to not only that missing middle, the ones who just can't afford it, but have got just enough, but even so to those completely below the poverty level. We cannot continue talking about this. So I'm very glad to hear that there's some studies that are being done on microinsurance in Nigeria. I don't know how far widespread it is, but from our side as Continental, we haven't come across much. I heard, I was sitting in an audience once with the Philippines, where there was mention of much development there on microinsurance to close the risk protection gap. And so what I liked about the Filipino insurance practitioner, I think he said something to the effect, was very apt, that they had learned, and they made lots of mistakes. They lost quite a bit of money with a few typhoons as well. And I like, he said there, I have it written here, we learned that the low-income sector cannot afford full coverage. The magic numbers have proven to be the intersection between affordability and the ability to start life again. I really like that. It wasn't about full coverage. It was the intersection between affordability, and these words are really beautiful, the ability to start life again. And I think we owe it to our communities. And then very quickly, the third is sustainability for our own individual organizations. I mean, we must sustain our own corporate enterprises. Sustainable profits, selected growth, and increasing employment. And if we're introducing innovative digital transformations, insurance ecosystems, and insurtechs, we must still be concerned as corporate leaders about employment endeavors for our sector. And then be true to the concepts of trust, that we're there to pay claims. And then finally, if you'll allow me, Elias, there's the sustainability pillar of the planet. Yeah, I'd like to think about Africa's challenges and our own corporate regulatory leadership commitment to strategically and innovatively hold the line. I think that's what is required of us, to hold the center, as it were, the balance. And to my mind, if you want balance, then you need servant leadership. You need a special kind of leadership to come to the fore. And I think that talks to all of us in the meeting. And on the issue of controversy, the other coins then that need to be considered is development on the one hand and sustainability on the other. And I've heard in many meetings where there's controversy, where the guy says, Africa will focus on development. Let the developed world focus on sustainability. I don't quite buy that. I think it is, but it's not as binary as that. It's not mutually exclusive. I think, again, balanced corporate leadership, we should be able to have the wherewithal and the ability to try and hold the center on that. The other last one is then relating to mitigation on the one side and adaptation. And again, for Africa, it will be, of course, more about adaptation because we're highly vulnerable. We don't have much resources to deal with the mitigation. But again, it's not too binary. So those would be my perspectives on the sustainability issues, Elias.
Interesting. And
so yeah. Maybe if I could just jump into the debate as well. So on my side, I think that we can't do everything at once is not an excuse not to do anything. So there is already, I think, a lot that the industry has started to do to respond to the impact of climate change. It's a lot more developed on the investment side because it's more straightforward to start there. But on the underwriting side, through the Net Zero Underwriting Alliance, as an example, we're starting to see it come to the fore. Secondly, it's not a one-size-fits-all. So I think it has to be a nuanced approach, because if we are too aggressive in saying that everyone should follow the same standard, then we're going to leave a lot of people outside of the conversation. And ultimately, for me, something like micro-insurance, which is a label that I don't really like, because it's insurance designed for a segment of the population, just like how every product is segmented and targets a certain part of the population. I think this microinsurance is also a way to respond to the needs of customers. And then, of course, like any other product, you have concerns of how do you ensure that the product is cost effective? How do you ensure that it fully addresses the needs of the customer? How do you design it such that it takes into account also the income levels and the cash flows of the customer? And by doing that as a business, you're already on the step to sustainability, even though you are not saying that you're building a sustainable business. Which is maybe why, to make the final point, it's really important to unpack these high-level definitions and break them down into concrete steps that everyone can do. And by so doing, you will realize that your business is already well on the path.
Yeah, please. Yes, Chief.
Just a retort. When we talk about development, it's really essentially about sustainable development. So, and Kasim is right, that perhaps separated. But I think we also have to be careful not to end up building sandcastles. You know, you can build sandcastles or you can build stone castles. Now, if you decide you want to build sandcastles to look good, to greenwash, then that's fine. But I think part of the realities, you know, that we need to face is that when we're talking about market development and how insurance also helps to build resilience, helps with financial protection, we must not run away from the realities. Now, the news yesterday and last week has been quite damaging in the sense that a lot of we do in Nigeria against the data, because data tells telling us how we respond to it. Transportation as a contributor to Nigeria GDP is quite high. But when you break down transportation, you find that road transportation is far higher than any other transportation. You don't need anyone to tell you that. Now, attempt to develop the rail network, which is not necessarily green as well. I mean, car is not green, rail is not necessarily green, neither is aircraft green. Now, people travel by rails, but they're facing an existential threat of the structure of the environment as well, where, you know, there's a lot of insecurity. And with that insecurity as insurers, we have to look at that as well. What are the things that are causing these insecurities? How do we respond to them? That's part of the social part of ESG. So we may focus on the climate part, but we must know that these things are like a puff pastry. It's just layers of dough wrapped into each other. And how it puffs out really just depends on how good you are at layering it. But to avoid it means you just get a lump of dough that nobody can eat. So really this is it from our perspective. Now, going back again to sustainable development, because again, it must be sustainable development, is that when you look at, perhaps as a country, we need to have a national risk management framework. You know, Rashida talked about market fire, for example. You know, insurers are not there in terms of market fire. But our markets are not structured. And insurance likes structure. It is what you can structure that you can protect. If you cannot structure it, you cannot protect it. Otherwise, in we're business that depends a lot on probabilities, which is essentially statistical and data. So if a market is not structured, an environment is not structured, your insurance is equal to the loss immediately. It's not, you know, I mean, we should not kid ourselves. It's equal to the loss. Again, last week, within Lagos, under the bridge, was turned into a factory of some sort with lots of businesses. So we're down by one major arterial road just because of that. Now we can sit here and talk about what we need to do, fancy sandcastles, but the concrete is being burnt. And that is also the level of poverty that we have to respond to. So I think in terms of solution, even as insurers, even with the international grants or international aids that we get, is to begin to work with our regulators and government on how to regulate and how to structure these informal activities. Now, Lagos State on the flood side, you know what? The British Deputy High Commissioner mentioned about rain and what have you, even in a good place. But you often find that it's not so much about, yes, 8 hours of rain can fall, but there are other infrastructural deficit that is actually causing these, to basically enlarge or enhance these damages. And what do I mean? Most places are not properly channeled in terms of drains. We don't have proper household water channel, talk less of rain drains. Now, until we begin to also, as an industry, address the risk of channeling properly, how do we then say we want to start covering it? The risk again, the premium again is equal to the risk. So we're professional business, we're technical business, we're also a social business, we're really completely anything we want to be as insurers. The thing is, if insurance does not make it, it is not sustainable. So it is about sustainable development. Thank you.
Right. All right, quite interesting, and maybe I just want to kind of pick a couple of things that have been said. Kasim talked about the missing middle. Does it even exist? Or maybe are we really just trying to create a missing middle? You kind of also highlighted sustainability versus development, and Adetola kind of just brought in that into perspective. There was an issue of adaptation and mitigation. What do we do from an African context? And interestingly, Leslie doesn't like micro insurance, and maybe we just the word, and he likes the impact, but just the word, and we'll be able to chip into that, and issues around it, issues around probe and start. And interestingly, I talked about structure. Now, from an African perspective, and ideally the way we look at context of managing risk, one of the, I would say, surveys that was done, most people in Africa tend to believe and go to the witch doctors and come to an insurance company for protection. And I don't know what structure the witches and they have around that. But let me just now bring these questions to all of us. What are the challenges faced in integrating ESG in our businesses? Maybe what are we faced? And if you can share that, maybe the team that is in the room will be able to know these are some of the pitfalls that we might need. So what are the challenges? And maybe I can start from Leslie.
Thank you very much. As the CEO of the #1 rated ESG insurance company, it's up that I should start. But also, it's not really a fair comparison with my colleagues, because we started from the ground up with the intention to solve climate change by providing risk transfer solutions. So ESG was built into our operating model from the get-go, whereas with my colleagues, they are starting already from a legacy book, and they also don't have the luxury that we have in terms of being able to focus on one main theme. Then in terms of maybe the practical challenges, we were doing a lot in terms of activities, but what we struggled with was these frameworks in terms of how the activities are reported. So firstly, you have to be able to measure the impact, for example, how many people are benefiting, and it gets really technical very quickly. You know, is it a household? What constitutes a household, and so forth. And there's an entire industry that's dedicated to this. I would say the second aspect that we found challenging was just around the way we integrate these frameworks within our strategy. So, for example, in our reporting framework, we use the Sustainable Development Goals, but the Sustainable Development Goals are not written with the insurance industry in mind, because they are intended by their very nature to be broad-based. So then how do you then take what is a very broad statement and integrate it into an operating business? Which is why maybe I've been harping on about the need to really break things down to a level that people can understand, and it can be integrated into the business process, because this is part of the ESG journey. And I really challenge my colleagues in the room today to say that if you did that for your company, you will see that already you've got a solid base to start from. And then maybe to address just the last point in terms of creating solutions that are relevant to the needs of the people. Because we rely on parametric insurance, which is very data heavy. So in Africa, the data collection hasn't always been great. So access to data that allows you, as my colleagues have already said, to accurately price the risk, and in our case on the parametric side, to be able to pay a claim when there is a claim, because our society is somewhat skeptical of insurance. So if there is, say, a drought on the ground, but this is not picked up by your model, then you run the risk of undermining the value proposition of insurers at large. So maybe those are just some of the examples that I wanted to highlight in terms of the challenges that we have faced.
Let me come to Rasidat. You're not running away. What are the challenges?
Wow, okay. I think some really good points from Leslie, and putting his own nuance into context for all of us to understand where he's coming from. So I think for Nigeria, it depends on who your shareholders were originally. So for someone like me, perhaps the challenges have been slightly different from some of the other players. Being part of, a group that was listed, being part of a company with development finance investors, has put us on that journey more than, a decade ago. And even then, when we started talking about, environmental social management, it was first of all a ESMS or something that used to be called then. I have one of my colleagues who used to lead it there, and it was like Greek to many people, even though naturally in Nigeria, we are actually, Africans, we actually recyclers by nature. I don't know if you notice. When we go to the store, we shop, we put all the bags, we fold it and put it in a drawer, so that you can reuse it. We buy groundnut, right? They're not originally made in those bottles, in case you think that those bottles came naturally from the factory. No, we actually recycled bottle things there. So there's some natural things that we do that we don't seem to be able to document properly and also create the flow so that people know why they are doing these things. These things were probably inherited from our parents, who were natural, perhaps environmentally aware individuals, maybe because they had little resources sometimes, but they actually worked on reuse, and which is a big part of, when you're thinking about environmental protection and all of those sort of things. So when we first started then talking about environmental social management, health and safety was one big conversation. You speak to companies and they'll be like, what are you saying? It is inside somewhere with one manager. And you're saying, can you share it with There's no special document for us. And you're like, but this shouldn't be a special document. So sometimes the access to that information is a big issue. Sometimes some companies will give you very quickly, but they don't actually practice what they wrote, right? When you're thinking about it as an insurer, as an organization ourselves, we have to then look at ourselves and say, what do we need to do differently? How do we start to make, change? And we have to educate ourselves. So the awareness and education, I think, is usually fundamental when you're talking about ESG, because if you don't understand, and I go back again to Leslie's point, sometimes it seems so technical, so high, very nice, fancy words. How do you bring it down to the stage where your company is? Because depending on the, sort of like maturity level of the organization and your employees, sometimes it's quite difficult. In some of the companies who talk about the reinsurers and internationals, they have a whole team, maybe a team of 10 or 15 people doing something that maybe in your own organization, only one person. In fact, you only going to give 50% of that person's time. So you have to try and find creative ways of getting other people involved, creating sort of like project teams. And this was for us, like I said, over a decade ago, we started the journey. I think for us in Nigeria, as a regulated entity, as insurers, governance is something that we're typically used to because there are many rules you have to follow. Then if you're a listed entity, it's even tougher, right? Because even on the Nigerian Stock Exchange, there is the CGRS, which is like a corporate governance rating system that some of the companies have sort of like subscribed to, that gives you a big view, encourages you, and drives you. So I think the area where many of us still struggle with comes from the social side as well as the environmental side. To say, how do you link all of that and create the right framework and governance that works for your own company? So from the social side, like I said to you, we didn't want to look at it as micro. We wanted to look at it as why are people exposed? What is our job really as an insurer? And why are we here? And what do people really want from us? So coming from that angle and then thinking, look, we don't have the technology to do certain things. But we started researching, understanding. And as technology evolved, using technology has been essential to be able to achieve more. Because, when you're thinking about really thin margins, and like Tola said earlier, the sort of businesses that everyone is looking for, the ones that will cover the bills very quickly. So here, to insure people at micro levels, you really, really need like millions of customers. And we still don't have those millions of customers yet, in the industry. I mean, we had a situation where we launched a product with a company, and thanks to NAICOM for their support then. And we're able to reach a few millions of customers ourselves and a few other people. But very quickly, regulatory, different positioning sort of like changed it, because there were then issues about, from a regulatory side, creating, parallel currency, don't use airtime to pay for insurance, many other issues came up, misunderstanding and all of that. So I think when you're working on the ESG side, the regulatory support is also important, their own understanding and how you engage with them and communicate as well. I think that can also make a really big difference. The environment is what we're talking about, but security is also part of the environment, because if we don't secure things, there will definitely be an issue. And it all comes back to that commitment of the company, because those things, they are not easy. They don't come naturally to us. They're actually uncomfortable. And so it's how we start to have those uncomfortable conversations in our organizations and start to charge people. But the amazing thing about the young generation now is that they care about a purpose. If we're able to sell a purpose to them, they understand and appreciate the purpose, then we can actually move things a lot further. So I think with ESG, it's really exciting. Everybody says nice things about it, but it's when rubber hits the road, whether it's working or not. But you just set some standards and keep improving, and don't match yourself to any organization. Can you be better than the last version of yourself? I think for me, that's sort of what worked for us from that angle. So thanks.
Right, thanks. And just to confirm, we are working closely with NAICOM on ESG, so they will be at the best of basically enabling the industry to integrate ESG.
I think it's important to make sure that we're all working together on it, not just with NAICOM alone as well.
Definitely. All right, super. Right, so Kasim, some reactions on the challenges maybe that you faced as an organization.
Yeah, thanks for that. I'm glad to hear that the last comment that there can be some pilot studies that kick off with NAICOM in Nigeria. Look, when it comes to the challenges, I'd like to approach it on the basis that it's not so much an internal challenge, it's external. It's the whole supply chain and the way that I'd like to see it. Because as the wholesale, at the end of the chain, the supply chain as it were, and providing capacity, the challenge is more around how we integrate ESG into that whole value chain. Look, maybe consider this. If an insured looks to invest in a shopping center in an eco-sensitive location, or we're talking of a acid-spewing fertilizer plant, maybe adjacent to a river tributary. We had an experience here in South Africa recently, so that comes to mind. So how are insurers, and less so reinsurers, going to be the ultimate decision maker or the final arbiters deciding on whether that project development sees the light of day or doesn't? So to my mind, surely, if we have all aligned in the value chain, and that includes the feisty entrepreneur, the developer, the guy, the individual, nobody stands in my way kind of entrepreneur at the get-go. Investors, DFIs, banks, the retail brokers, the insurers, the reinsurance brokers, and then us as the reinsurers, all operating within a facilitating, of course, supporting regulatory, supervisory framework to keep it all in check with core principles enforced. Now that, I'm hoping many are not thinking about that and saying, you know, that's highly naive or it's wishful thinking. But I really believe it can be done, because we're talking at the end of the day, UN, United Nations, PSI, then we must look and advocate an overarching, even global alignment, to my mind. It is, after all, I keep on saying this to people, it's one spherical, limited, and currently blue planet after all. That's what we have. And the last time I looked, I didn't see it tethered with an umbilical cord of sorts for additional oxygen and fresh water. So we got to try and get everyone aligned with this thinking. I mean, Rashidat was talking about the youth and the youth wanting to see purpose. I think the youth will definitely keep us in check because it's their future. So to my mind, my concluding view, if government and the regulators are clear about ESG sustainability objectives, and I'm glad to see, by the way, the African Union has as its 2063, that's 50 years from the 2013 meeting, 2063 agenda goals, as well have considered all those goals and the linkage to SDGs, Sustainable Development Goals. So I'm glad to see that the AU is also putting emphasis in this regard. Hopefully it ensures that we're all getting aligned. And if investors too are clear about ESG risks, then the insurance value chain is called upon more than for its risk management and risk mitigating roles, which we're very good at, and purposes, because I mean, we underwrite. So if we're looking at a mining development, we'll deal with it accordingly, depending on the risk exposures. If there's no investment, no capital for coal mining, there are no coal mines to insure. And then too, will insurers and reinsurers on the African continent be willing to provide capacity and coverage, let's say, to illegal mining operations? But of course, if an illegal operating mine is now using child labor or spewing acid into groundwater or natural river systems, or we're talking about a slimes tailings dam of a mine becoming a mud flood risk to large communities located downstream, then to my mind, this is our core ESG role and purpose, to identify those risks, make the various authorities aware. Ourselves will deal with the underwriting issues if needs be. But I think there's an important role for us to play. But it really is not something that is just for individual companies to deal with. Thanks, Elias.
Adetola, can you sum this up before we, we get to the audience and get some questions from the room?
The challenge for us is actually, it's a multi-one. First of all, I'll speak to it on the micro side. And again, for me, data is important. Now, 13% of Nigeria's GDP is trade. Now, what are the things that we bring into the country? Now, if we begin to look at the capital items that come into the country, you will probably find that power generators form a bulk of that. Now, how do we begin, from a global or even from an African perspective, begin to restructure the type and nature of capital assets that comes into the country? Are you going to swap fossil fuel-based generators, for hydrogen-based generators? And when we have hydrogen-based generators come into the country, are you going to have the right service points and the right technicians also that will come into the country to service them? Or are we going to swap the national, privatized national gas turbines? Are we going to swap them into hydrogen-based turbines? So these are really the things that we need to begin to look at from an international trade perspective. Now, insurance will cover what is available to cover, not what is going to be available to cover, because like I said, that is essentially just putting the industry in a limbo. Now, when Rashida said the use, we also have to be careful about how we talk about the use. The use in Nigeria is not one use. It's also stratified along the economic class that we have. That is also important. A lot of the youth are not, they're not employed. Or as the Nigerian Bureau of Statistics likes to say it, because it depends on how you look at statistics for unemployment. If you look at it from at least, and I'm sure a lot of us here would know that on Lagos Road, they have a lot of hustlers. So when you see people who are selling things on the road, statistically they are employed, but they are partially employed. But these guys are living from hand to mouth. Now for them, value is really what contributes to their lives. Value is not whether the environment is about to tumble, So we need to also try to sell the value of insurance. And what is value essentially? Value is consumption. Now, when you look at insurance from a consumption aspect, you then begin to realize that a lot of people who really do not understand insurance is because they have not consumed it. And I'm talking about non-health. If you talk about health insurance, for example now, health insurance rate of take-up is quite high. Why? Because there is consumption. Now, liability insurance can also be quite high, but there's no consumption, and people look at it as if it's a tax. And when I say that, I'm using, again, motor liability insurance, for example. Now, the data in the country says that we have about, over 11 million cars, okay? That's the data. And, data is also something we have to pay attention to, because sometimes our data sets are so historical that for you to get something that is current becomes a bit of a Herculean task. So if we're talking about FSD, for example, these are the risk data that are actually quite important. How do we help to ensure that we have current and relevant data? We also have the Nigerian Insurance Industry Database. So now when you look at the Nigerian Insurance Industry Database as well, over time, there are about above 6 million, let's say 6.5 million vehicles registered over time since the beginning of, the NID. Now, if you take 6.5 over 11, you already, the arithmetic is there. It's not any difficult maths. It shows that practically maybe half of people who own cars who can create liability that can affect the national wealth. It says that people who have accidents not being able to be compensated, they're quite high. Now, when you look at the industry database again, from active policies, you then find that active policies are possibly about 3 million. Now, you have policies overall, then you have active policies. It means, again, that roughly about 30% have access to consume the benefit of liability insurance. Most people don't even see the benefit. What is the benefit of liability insurance? It provides funds, to be able to treat people if they have accidents. So you fund the hospitals. It provides a legacy fund for the family of an accident victim who is dead. Most people do not really see, that as well. Then apart from that, it also provides the direct, property damage fund. So people don't have to dip into their, savings to repair their cars. Now, whenever I hear the witch doctor story or the church or mosque, story, I believe it's still about value as well. What are we doing to sell value? Because those who don't want to insure because of religion, and whether that religion is traditional or Semitic, is not neither here nor there. What people are really saying is that they want to be able to consume an insurance that does not look as if they're just parting with their money without getting anything back. That is essentially, it's just pure human psychology. And I think within our industry as well, perhaps another thing we need to focus on is that data of human behavior. It goes back to what is the behavioral economics of insurance. And the more we look at the behavioral economics of insurance, without necessarily, talking to, the anecdotal evidences or people don't insure because of this or because of that, we then begin to talk about the other aspect of, ESG, which is the social. So the social aspect requires investment in behavioral analysis. So then you move on again to now the bit that concerns us as insurers and that particularly affects us is the cost of reinsurance. Now, as we begin to still insure fossil fuel-based economies, which is what Nigeria is, then there's the crude oil, and there's, what have you. Crude oil extraction, a lot of our premium comes from that. Vehicles on road, a lot of our premium is vehicle, crude oil, and I'm going to come back to the last one. Now, quickly on this one, is that as you go into the reinsurance market, the more traditional reinsurers are now being a little bit more difficult, in terms of the pricing of this risk. It then forces insurers to begin to look for alternative insurers who are still willing to support. How long are we going to be able to put risk on our balance sheets that we cannot put? So there's also an existential threat on our balance sheet concerning cost of reinsurance. Now, why is cost of reinsurance such a major deal? The penetration rate for insurance in Nigeria is 0.3. And at 0.3%, when we respond to competition, insurers hardly think of the industry because already you need the big premiums to be able to even do the more sustainable, lower premiums. Each individual or corporation in Nigeria is almost a local government. It comes back to, again, the infrastructural deficit. So like I said, it's a puff pastry. How do you really bake it? Now, another thing, and finally, that I want to talk about the final challenge, again, is on investment side, okay? Insurers have sizable fund, particularly from the life annuity side. Recent public data says that, insurance asset is now over $1 trillion, okay? Pension fund assets, which we don't count for insurance, but I think it counts for the other financial services. Pension fund asset is about, 13 trillion, so let's say together you have about 14 trillion. Now, what is this, 14 or so trillion doing? You will find that the bulk of it is in government debt. Now, government debt, is it sustainable? No. Because yes, the economists will tell you that, yeah, government debt is okay because they can print money. Now, you print money, you get inflation. You get inflation, you get more poverty. So what do? How do we, from a regulatory framework, adapt the rules governing the investment of insurance and pension funds direct into green infrastructure, development that would also help to then improve the sustainable future of the insurance industry. So it's almost like backward integration. You get the fund, you put the fund in green infrastructure, and then hopefully the green infrastructure will enable us to meet more the ESG, and I'm talking about the ESG more from the E now, because like I said, the governance part, I think, is basically largely sorted. The social part has a bit of some wonks in it, but the environment side is really where we need to think of backward integration to improve that aspect. And a lot of that, again, comes from engaging with, on the macro side and on the meso side, engaging with government and regulators, to deliver on that. So if we can address these challenges from the micro, from the regulatory, from the macro side, then I think our industry will really blossom. But I don't think we should talk generally about these things without breaking it down to the bare bones statistics, bare bones behavioral economics to get the right results that we desire for the future. Thank you.
Great. Now Adetola has just given us, as an industry, an E on E, and E on ESG. We need to do more. But let me just get into the audience. I don't know if you have a question, kindly. There are a couple of hands up. Do you have another mic? There's a hand on that particular end. Over there. Any other hand? There's another hand over here. Hey, there are more hands coming up. 4, 5, 6. Okay, we have a couple of few minutes, so maybe we'll take a couple of questions. Okay, all right. You can tell us your name, organization, and you can put your question.
My name is Joy Sulukinan, and I work for Cattle Express Assurance, Lagos, Nigeria. It has been, an interesting climate change and all of that. It is also important that we appreciate the fact, that we need to protect the environment. If the environment is gone, then there won't be any foundation or base, so to speak, for you to start looking at the issues of establishing businesses and all of that. So I think the protection of the environment is big and very critical to our conversation. To bring that to base a bit, I was listening to the radio this morning as I was coming to work, and an important thing that struck my attention was the fact that River State, Port Harcourt, to be specific, has been noted as the worst place in the world to live in terms of the toxicity of the environment, gas flaring and all of that, and you begin to wonder. We have explored crude oil for over 60 years in this country. And then as the official from Leadway has said, exploration of crude oil has been an important aspect of our GDP and our economy. And of course, like she rightly said, it has kind of attracted attention, of investors, of insurers, and all of that. One would then wonder, for over 60 years, what has been the impact of insurers, of investors, in tackling the environmental degradation in the Niger Delta? So this is a food for thought, and I think it's basic, to our conversation, today. And then, like Llewellyn, said when discussing this topic, is the fact that we need to make this conversation very relatable. How would somebody in Niger Delta, relate to the conversation we are having today. The person in Niger Delta is more concerned about his environment. His environment is almost gone. And then you even think, thinking outside of the box a bit, we have the extraction of crude oil going on in the Niger Delta. And then recently, we have Dangote establishing the refinery somewhere in Lekki. You take the crude from Niger Delta, you bring it down to Lagos and refine it. How fair is that? How fair is it to the people that you have degraded their environment and then they are basically left with not to insist on? So I think when we begin to relate, this conversation more in terms of our day-to-day living, how it has affected us as individuals, how it has affected us as corporate organization, and then taking it up to the level of government. We need regulation. Because I think this is a top to bottom, thing. It's a top to bottom approach that we need. We need to set the expected roadmap. How do we begin to resolve the issue? Because we need, the government to set the pace, and then that will, give a kind of pathway for those that are investing, for those that are insurers, and then how we are able to collaborate and achieve, our objective in this area. Thank you very much.
Thank you very much. Right. There was a hand here. Then there was another hand. Right. Yeah, we can start here.
Thank you. My name is Murital Ahmed. I work for FBN Insurance, a member of the Salam Group. My question actually speaks partly to what the first questioner asked. So, in light of recent events and perhaps annual events we've been having, issues around flood, drought, earthman, famines, clashes. For some states in Nigeria this year will have floods. Unfortunately, there will be loss of lives and assets. We know that for certain, and it saddens that I'm yet to be corrected that we don't have a national risk management framework, and you spoke to that. Tola, thank you very much, because in having that framework, therein we can integrate the social insurance you spoke about, and even the ESG, and not just take it in pieces, because it seems these are all silos conversations happening here and there. So how do we integrate all this into a coherent framework because you spoke about all these issues around. We need to initiate that discussion about. And I don't know if there's any other industry or regulator that should take charge of that discussion, if not for the people in this room or my dear regulator as well, to commence that discussion on having a national risk management framework. Thank you.
Right, so maybe we can get another. That's more on how then do we now integrate these discussions into the national risk management framework. There's another question there.
Good afternoon. My name is Amaka Akwiu. I'm with Continental Re. The ESG conversation that is being brought up today it's a very vital conversation, definitely. But I almost feel as if we are dancing to the wrong rhetoric, right? Africa as a whole contributes less than 4% of global emissions. So, but we are bearing the brunt, or the major part of the brunt of the environmental issues. So our focus is not about what we do, or I believe personally that our focus is not just about what we do differently or how we introduce green products to the industry, but our focus should be about adaptability to what our new future is. It's not just about paying claims from a capital risk point of view, because at some point even the farmers have no more need for the grain because the land is not sustainable to plant the grain in the first place. So we have to go beyond the concept of we are paying claims. We need as an industry to bring our full influence to bear on the government. From an agriculture point of view, what are we doing to adapt to the fact of climate change? Are we considering irrigation? Are we pushing the government to ensure that there are irrigation plans in place where necessary, where the data supports it? Because it just can't be about paying claims. For you to look at, you need the risk management. The National Flood Agency, whether you compare it to the UK or anywhere else, there are flood agencies, are not done solely by the private sector. You need the influence of the government to be at the table. We cannot, as an industry, solve the Africa problem by ourselves. We need to change that rhetoric. We can contribute to the solution, but we cannot solve that problem ourselves. We have to be partnering with the government, influencing the government, and making sure that the government is as transparent as possible on crucial matters. You look at the Lekki Peninsula, for example. There must be at least 1,001 estates going up in that development, in that area. What does that mean for the environment? What are we doing as an industry to hold the government responsible to ensure that the necessary and adequate environmental and risk management measures are put in place? It's not just enough to sit here and be talking about it and we say the nice things, build sandcastles, and then we go. We satisfy our conscience that we've spoken, we've addressed everything that needs to be addressed, and then we go home and go back to as if nothing has happened. We need to bring the full influence of our industry to bear on all our African governments, because our agenda is not necessarily about correction, but adaptability to this new future. Thank you.
Thank you very much. The last question. Yep.
Hello, my name is Idong Isit. I work for Royal Exchange General Insurance. I have quite a lot to say, but I'm going to say very little.
Just make it short.
Okay, like I would jokingly say, if someone is hungry and pounded yam is being prepared, and you have to wait for 1 or 2 hours, and there's a slice of bread, it's better you take that slice of bread, because if you keep waiting till the pounded yam is ready, you might have collapsed. So while we are talking about the national risk management framework, we're talking about all these, there are little things that the insurance industry should do as part of its contribution to ESG goals. And I think that is the essence of this conversation. Like he said earlier on, that what we need to do is to break down this concept of sustainability and move it to the board level, management level. Let the conversation begin. Let people actually understand what it is and what steps we need to do. And because there's also going to be a transition period. For instance, in my company last year, we set up an ESG desk, and we started a process of integrating into our model of operations. And then all the other things are work in progress. Now, for us, the first step is in terms of advocacy and awareness. It's not just that you wake up one morning and say, we are not doing oil and gas anymore. We are not going to do that. It's a transition period. Now, what if global reinsurers decide to say, look, from XYZ years, we are not accepting any oil and gas transactions? Be the fate of Nigerian reinsurers, for instance. If we feel we cannot move away, like Sultan said, it's the basic things we need to do. Let me give us an idea. We have household garbages that are natural biodegradable substances. We dump them together with polythene and all that, take it somewhere and get it burnt. This is a natural manure that doesn't have any negative effects on the environment that could have been recycled and sent back to the farms. We throw them away and we import inorganic fertilizers. It pains my heart because what we are supposed to plow back into the environment, we are destroying it. And we're bringing in inorganic materials that will further endanger lives of animals and humans alike. Now, what we have done in my company is to engage our customers who are engaged in businesses that are not using sustainable energy. What we've discovered is that most of them have the understanding, but the resources to migrate becomes a challenge. Imagine someone has been using 2 generators, big generators. They now realize that, in fact, in the last 1 month or 6 weeks, we are having rising costs of diesel, and it's a challenge to business. They want to migrate to cleaner energy, solar, which is quite cheaper in the long run, but the setup cost is an issue. So I think what FSD and other global agencies should do is to think of how we can finance institutions, even individuals, especially the poorer people, in acquisition of this cleaner energy. So it's a transition phase. Things like flood in Lagos, for instance, is not because the drains are not there. It's because people dump refuse on the drains. So as insurers, we can redirect our CSR towards things like this, tree planting campaigns, in terms of cleaning the environment, recycling, and all those. What our people, first of all, need is the understanding that this environment, our world, has to be protected first. If not, like Sule Kenan said, there's no need for business. If the whole environment is destroyed, everything goes. Thank you.
Right, thank you. So I just want us to quickly react to all of this, then I'll allow Mark to make a reaction. There are so many hands, and we need to close, right? So I just want us to react to some of the comments that are coming through, maybe in a minute each. Yeah, then we can kind of see whether we can take one more question. And maybe within that also you can wrap up on what opportunities do we see on integrating ESG.
Right, so I'll just make some quick observations. So firstly, I think I really like what the gentleman said in the sense that the insurance industry cannot solve all the challenges that the country faces by itself. So obviously we are part of the solution. In any case, right, if you think about it in terms of just classic insurance thinking, with all the risks, you will then have to categorize them by frequency and severity and adopt risk mitigation for some of them, retention for others, and transfer for others. And this level of thinking, I think, needs to be reflected at the level of governments. Because if you're having a flood or a drought every single year, then obviously insurance is not the solution, because the premium is going to be a cost to that. But then, you know, that said, the insurance industry still has on the advocacy side, you know, with our risk management expertise, on the investment side, you know, financing the transition to the to green energy and to better farming practices, and also on the underwriting side to help drive the capital allocation decisions.
Adetol, some reactions and what opportunities we see on ESG?
Well, I mean, the opportunities, as mentioned earlier, are quite vast. One of which, for me, is structure. It's a question of how do we build a structure, how do we regulate behavior, how do we get into people's minds. You know, so these present an opportunity at a micro level. And the gentleman that says, you know, what can we do? It's not that we don't have drains in Lagos, for example. It's that, you know, maybe they're covered and what have you. is also, for me, is also still a structural conversation. What do we do in terms of the structure? Gutters are blocked, they're not necessarily rain drains, and we can all witness that. How do we put funding into such infrastructural development as well? How do we work with government from the micro side? Because I mean, it's not as if you're doing one, you leave the other. It's a complex approach that requires different hands to start, you know, what they need to do, and then we meet somewhere at the middle. I like there's a book that I like, and I like it because it's called Waiting for, I don't know whether it's, I think it's Waiting for Godot, although I like to call it Waiting for Godot. I like to call it Waiting for Godot, you know, and it's a question of sometimes, maybe as Nigerians or as Africans, we're waiting for somebody, you know, to do something that we can do by ourselves, you know, and we just need to do it, because ultimately all mankind is us. Let's talk about, okay, you have environmental degradation within the Niger Delta, and then you have a refinery in Lagos. It means that maybe Lagos will also start being polluted again as well. So we need to begin to look at that pollution from that perspective. But sometimes within our environment, those are uncomfortable political conversations that come in. They're looked at from a benefit point of view than from a risk point of view. When you begin to look at even the structure of the regional structure as well for oil producing states and what have you, you then come into aspects where the law itself has actually been changed. You find that most of swamp and land is now considered for the marginal field. And marginal field essentially means Nigerian-led owners, okay? Then you have a lot of illegal refineries also going on. So it comes back to structure again. So I don't think we can leave out structural changes, you know, when we talk about these things, and then behavioral influence. How do we tie those two together? If there's anything for me, I think that is it. And I think that will come from, you know, just coming together to work, and then insurance can be part of that. Rather than chase the market, we can also help with future, we can help with adaptability, and then we can help with the future. Thank you.
Thank you.
Okay. I think I like to say to people that Nigeria has the best policies and documentations in the world. I don't think any of our policies is lower quality than any other country. Look for the best. The question isn't about the policies, it's about the execution. It's about the fact that sometimes those policies are so nice and wonderful, but they're not practicable. And you know, so for me, I look at it to say that we need to address things from a government standpoint. It's not just the insurers, it's the citizens. We do not hold our government accountable. So I think insurers can do their bit, but I can assure you that it's not only insurers that are talking about sustainability. It's being spoken about in the banking sector, it's being spoken about in manufacturing, and if everyone is listening to each other and there's a whole room of people saying I'm bringing pressure, perhaps we will see a lot more pressure and actions coming out of it. But as you know, Adetola said, when you talk about the infrastructures and you take care of that, we have to take about the execution and the support they get from every one of us. So what do we do as an individual in our own homes? You know, how are we making the difference? How do we start to make an impact? We see a lot of new startups addressing recycling and all of that. How are we supporting them? How are we leveraging them? Just in our own homes. Then we go to our own organizations. You don't even need to be an insurer, even if you're just an SME and all. We've been talking about sustainability. How do we start to teach everyone that let's do this differently, let's do this better. Don't throw that refuse there, put it inside this place. So there is that organizational impact, whether from our own corporate responsibility as an organization or what we do as corporate social responsibility. I think that even goes, it's not about whether we're an insurer, even as a regulator. How are our regulators as an organization, what are they doing? How are they educating everyone in their company to start to understand what this means. You know, I think for us in AXA, for example, we started a climate academy, a course that everybody takes, and we're hoping to be able to share it with our clients, our partners, and all of them. And it's just teaching you about what this thing means. Because sometimes we see it sounds so sexy, so big, but when you start it, it's just a day worth of course online on LinkedIn. But when you start to take it, you start to at least create education and awareness. So I think even the regulators and the members of the regulatory agencies, they themselves, they need to understand what it means. I have gone to make presentations to CBN before, and all they told me is that insurance is just a fraud. Even the guys there themselves do not appreciate the value and the benefit. So now you want to talk about sustainability. So if they don't understand what it means and how it affects us, going back to Leslie's point, we cannot make any big difference from there. Then we'll then look at ourselves as investors and start to say, what are we investing in? And will our regulator give us incentives? If people invest in this area, can you incentivize it? Can you encourage us to do more? Could you, have an impact on capital if somebody does this? We need to also understand that from a NAICOM perspective and start to influence it and start to charge us to say, what commitment are you making? We're not saying you should put all your money there. Start somewhere. Don't put a percentage, but let's start to encourage and create the opportunity for organizations to think about it so that at least there's something that encourages all of us from a NAICOM regulatory standpoint. I think that's very, very important as well. And how are you getting the industry to educate the leaders, the board, the senior people in the organization, and then all the way down to people who are operating? Because if we don't create education and awareness, I don't see any of us moving anywhere. So I think from that perspective as well, we need to look at it as a whole. And then, of course, we go back to the schools, to educating people. So there's just so much. So we need the DFIs, all the funding companies to help from an infrastructure, regulatory, investing standpoint. I think that would be really wonderful. There's still so many issues. But we just need to make people accountable and just start from the little things we can do, because it's about creating the momentum. I think the big issue is that the momentum has not started. So going back to the gentleman who says speaking about it is the first step of people understanding the importance, because people don't even know. You can go to many companies, even in my company, you can go to some places, they still don't understand, because we still don't have 100% of people who have taken the courses, and we're just trying to enforce it to say, every one of you, by the end of this year, you need to take the course. So what are we going to do in our organizations to help them to understand what it means? And then, of course, we'll now come back to creating products, getting the support of NAICOM, and launching all sorts of new things. You want to encourage fast track, micro solutions, inclusion solutions, fast track it. Don't charge them whatever you would charge ordinarily for, a normal product, and create just that interest. I think all of those things will make a big difference. Thanks.
Right, thanks. Kasim, are you online? Before I go to Mark, then I've seen a hand from NAICOM, because NAICOM has raised his hand. We'll have to take that question, whether we like it or not. Then I'll finalize with Zila. Mark, please. Do you have your mic? Kasim. Oh, Kasim. Right.
Okay. I'll try and be brief.
A minute, please. Yeah.
Yeah. Okay. I'll certainly try and contain it, and maybe just the concluding remarks. I think what I'm glad to hear is this. To my mind, where we've been thinking about this for some time, it's impossible to try and do this on your own. It's got to be a collaborative effort across an ecosystem, as it were. And so it's everyone in community, including government and regulators, of course. And so one of the principles of PSI in any event, out of the 4 principles on PSI, the one says we work together, because that's the commitment as the signatory. We work together with government regulators to promote widespread action. That's government and government regulators to promote widespread action. Let me say this, there's the acronym, if you're looking at risk management, if you're looking at disaster risk management, it goes PMPRR, and you got to prevent, you then have to mitigate, you then have to prepare, and then you recover, or you respond, sorry, and then you recover. And I'd like to bring in right in the front there, predict. And so what we've tried to do with FDA the past years, and we haven't been too successful, is the concept to create flood maps, no different to what you have with FEMA and other flood organizations in the rest of the world. But for Africa, we don't have that data. And so you could create reasonably sound, technically correct flood maps, say for Lagos or Accra. But the example that always comes to mind, because it's closer to me where I am in Southern Africa, is Mozambique. And we always have major floods in Mozambican region. And I'm sure many of you recall stories, heroic acts, where a woman was plucked from a tree on the verge of giving birth. Now, those are good stories to tell, but for me personally, as an engineer, when I think about that and I think of risk from an insurance perspective, it sounds ludicrous that those kinds of things should actually happen, because we should have been able to predict and know that those areas are going to flood, and then do whatever is necessary, build whatever structures are required to ensure communities were given the message that your area is now going to flood, get people into an area and have an ability to get the necessary resources to them, and then maybe take them away, as opposed to getting helicopters flying in from the South African National Defense Force to fly into another country and to pluck people up from trees and roofs of homes and so forth. I mean, that's what I think is the role that we can play on insurance, is to give that proactive and to trigger the necessary thinking in the system around issues of risk management. If you'll allow me just to then make this concluding remark, Elias, I wrote a note here for myself to remind me. I wanted to say that clearly it's about individual acts and collective, or if you want to talk about it, competition and collaboration. And for us in Africa, if you really think about it, colleagues, we're not, I'm talking from an insurance perspective in particular, we're not at the dining table as far as I'm concerned this year. I mean, go and look at the retained country premium statistics. So there's a lot more collaboration, to my mind, that is warranted to build our reserves and then to build our own internal capacity on the continent, so that we too can robustly stand tall to play our rightful and core economic role on the continent. Thank you.
Thank you. Right. Comment from Mark, then I'll take a comment from the NAICOM team, and I'll finalize Zila.
Thanks, Elias, and I'll leave it to you to wrap up, obviously. But I just wanted to say my perception of this discussion. We all go to workshops, right, and meetings, conferences that, let's face it, are not always the most exciting, right? But I just wanted to say, you look around the room this morning, and there's been very few people on their mobile phones, on their laptops, and I think it's a really palpable sense of engagement. And I just wanted to say thanks to everybody for paying attention. Full credit to the panel for bringing your intellectual commitment to it, for making it real as well. So we've had the yams over here, we've had the puff pastry over here, we've had our friend also from River State over here, and making it really real, and that's an incredibly important part of the communication. But thank you for bringing your humanity to the discussion as well, because I think that's what really makes the difference. I think when people really feel that there is a need for a change. So thank you very much for that. My question is really quite simple, and I'm really talking about the sense of a need for moving together in lockstep and for collaboration and locking arms on this. And there was a lot of discussion around the need for a national risk management framework and for somebody to take leadership, right? But my question is quite a simple one, and we're talking here about the principles for sustainable insurance. We talked about a framework here. You said, Rashidat, that we've got the best policies and frameworks and things like that in the world, and maybe you have. But my question is, why don't we just regulate? My concern really is that we don't have a lot of time to get this stuff to happen. And the more, nobody, kind of in principle, nobody likes the idea of regulation. But I just feel that on ESG matters, where there is a common need, really, for us all to work together on this, whether there is a particular case for regulating for ESG. I stand to be corrected, but I think I'm right in saying that South Africa is still the only country in Africa that has actually regulated for ESG. And it took a long time for the regulation to be passed before it then became effective. So it feels to me as though, if there is such a palpable sense of common purpose here, why don't you, as the industry, go to NAICOM and say, let's regulate for this stuff? So that's a bit of a tricky segue for NAICOM, right, to follow. But
so I can take NAICOM's question, then I think we'll be able to kind of get one of the panelists giving or making a response on that. So NAICOM, are you ready to write another piece of paper?
Not a piece of paper. Good morning, everyone. I'm just following from what the other man said about the emission from Africa. If Africans' emission is just 4%, right, then it means Africa is not a major contributor of emissions around the world. So even if Africa should stop today, the impact will not be felt that much. Now, I'm saying if our reduction, right, will affect the whole world, then there should be an incentive for us to make those such reduction. All I'm saying is, how do we go about to ensure that those people contributing major to emissions of the world bring out their own reductions to our level as Africans to 4% and see if it goes down together? How do we do that? I think that should be a better approach to this than individuals collectively. Yes, individual collectively, but if there is no incentive for me to reduce and I know I'm not contributing that much, why do you want me to start first? Thank you.
Right, so I think we might have this
I'm excited, but
if 3 p.m.
If you don't mind me starting.
A minute,
okay.
Then yeah, so we can do a minute,
a minute each, right? Because I see they have comments. So I think if I come back to you first, right? Despite us having a small contribution, we don't have safety nets. Our people are significantly exposed. So sometimes it's not about the quantum of what we contribute. It's about the impact on us. And guess what? The whole movement did not start from Africa anyway, because we're not the biggest contributor. It started from countries who are bigger contributors, who are making commitments to say we're going to improve it. But here, I think one of the biggest challenges of Africa is that we have not created such a fantastic community framework that protects all our people, unfortunately. And that's why we're constantly vulnerable. Because I think in more developed markets, they first of all create things for the community, and those community efforts will affect families and affect individuals. But us, we start from the individuals who are rich and who then might help some of the family members and all, and then maybe some of it to trickle into the community. So I think in those environments, the community is being, really, really protected, and therefore it sort of cascades down. So what I would say to us is that, yes, we need to make people accountable, but how can we work together? There are funds, there are organizations who can bring in funding into Africa to help us protect the different countries based on the different exposures. We can build infrastructures, we can make sure that we're creating more preventive measures in place, because preventives are not what we do. We're not used to it. So we need to create a lot more just predict something is going to happen. So why are we waiting? It's strange that it's like a car is going to hit you and you now stay in front of the car. You're going to move away because if you don't, something really negative is going to happen to you. So I would say to us that we need to start to take action, start to invest and create things that really help us in this way, because we then make at least some impact for our people, our own awareness, and also some of the people creating it accountable as well. And if we find that right balance, then we have a big chance to sort of like make a little bit of change. I do hear the point on regulation, and I don't think it's bad, but I don't think, like I said, there are regulations and there are people who follow the regulation. If you look at NAICOM, they can probably tell you that, inside the list of 60 or so insurance companies, if you're 59, there are companies who are not following most of the compulsory governance processes. So what do they do to them? So I think it's worth, pushing, but it can't just be regulation alone. You need to really actively sort of like adapt those things to some of the realities. And if some companies are not going to be able to make it, then how do you help them? What do you do to them? That's probably where it is. But truly, there's probably a need for regulation, but there are some regulation already. Maybe we just need to enhance, and then we need to find, support structures in place. I'll stop there.
Some reactions? 1 minute?
Okay. Or less than 1 minute. Well, I do agree that perhaps there should be regulation around the E and the S, but because I think NAICOM already has regulation around the G, and also really NAICOM already has regulation around the S and G, but not the E. So the beauty about having regulation for the E would be possibly forcing us to also look at the critical impact, and also the substitutions, if we might say. So it begins to force us to look at the substitutes and how to bring the substitutes to the table. And, it goes back to what was said earlier about having flood control agencies, and what do we do in our own country, what do we do within Africa. So regulation is always a good way to build that consciousness within organizations. So I definitely would say yes to regulation on the E side, but regulation that is sustainable, because there's social impact and then there's environmental impact. I don't think we can substitute one for the other. People say, okay, if the environment is damaged, nobody will talk about what is there. But sometimes also the human beings might have become extinct before the environment itself blows up. So it needs to be balanced.
Leslie, any reaction?
Yeah. So then, regarding the 4%, this is part of the climate justice argument, and I had the good fortune of being in Glasgow for the COP26 discussions. And this came up several times, but in fact, simply put, there is no international mechanism to force countries to contribute, and in fact, the climate COP is designed to be the platform at which this sort of discussions can happen. And as you know, the developed countries have pledged $100 billion per year towards adaptation and mitigation. And then on the part about regulation, actually, I am supportive of what Mark has said, because when you look at Nigeria, like many other African countries, the largest class of business are the compulsory business lines. So if it works there, why wouldn't it work in the other context? We also talked about the investment side, why insurance companies invest in government bonds instead of investing directly in the real economy. That's also driven by regulation, right? When you look at the capital charge of government bonds versus operating businesses. And we should acknowledge this as part of the solution. Thanks.
Thank you. I just want to bring in the director from NAICOM, Jankara, and kind of to tell us on the social governance side, are we having something on the environmental side? Jankara, please. Mike.
Thank you, Elias. Thank you, all the panelists, for all the good things you said this morning. On a personal side, I have some issues, and that was well captured by my colleague from Continental. Of course, the issue about justice and all that you've talked about. I think that talks to that. Now, from NAICOM side, the issue around principles of sustainable insurance, it's not new to us. Of course, we started a project way back in 2015. We had a committee that looked at it. We actually even got somebody from Oxford who actually came to the commission and then spoke to us about ESG and all that we can do. I'm glad to say PENCOM has done a lot in that regard. and we were trying to mimic what they did. So for NAICOM and the management of NAICOM, it's been an important issue, and it's part of the deliverables in our strategic plan. Of course, we intend to embed all the issues around sustainability in our regulation. So, of course, that was why, Elias, if you remember, when you did talk to me about ESG, and of course the consultants you've gotten for us, I think it's Semfree, right, if I'm correct. We're already talking to them and we're already discussing. In fact, there's a survey ongoing currently. We've sent that survey to all the companies, insurance institutions in Nigeria. And we appeal that insurance companies should please complete that survey. That's going to sort of also create the basics for further actions that we're going to take. So having said that, I just want to thank everybody here. You've talked about the need for national risk management framework. Of course, we have the National Emergency Management Agency, we have the FEMA, we have so many agencies in Nigeria. It's not something, as has been said by Ms. Aditola, it's not something the industry can just wake up and you just create. Of course, we would need to talk. And as has been said by Mark, the fact that we're talking about it is even a great starting point. And so for me, I think we're doing very well. Thank you very much.
Thank you. Right, so we can wrap this up here, and maybe I'll just take it back to Zila. Thank you very much, panelists, and thank you for all of you that have listened to us this morning. Thank you.
Thank you very much. From sitting where I was sitting, I think we have general consensus that this is important and we should do it. And just to make sure that we keep it participatory, we have a number of virtual participants as well. And I'll just like to quickly read through some of the comments, which have already been answered, so no need to respond. But there was a question on what do we view as our greatest opportunity. I think that has been answered, and the challenges that we are facing. And then Dr. Yeside Oyetayo say that I want to suggest that we do not wait for the government on this issue. The insurance industry can commence its sustainable insurance initiatives and plan taking one step at a time as one body. And that's the reason why we are gathered here today. We are gathered here, as you can see, Kasim is in South Africa. We have different African insurance leaders here today, and we're saying, yes, we cannot do everything, but there's something that we can do as an industry. It's not going to make everything change at the same time, but it's just one step at a time. And we are all at different stages as insurance industries, and at our own level, we are doing something. So we're going to have a session on the endorsement of the Declaration on Sustainable Insurance. But right now, I think I would just like to call upon all of you to join us as African insurance leaders to make a change in the continent. We all see the climate change impact. So we've taken quite a bit of time on the panel discussion. So if you allow me, I would like to just take a 15 minutes break instead of 30. Then come back. So just have your coffee and come back with your coffee, so that we don't delay too much. So thank you very much. The panel that was very participatory and very interesting. And next time, perhaps you should invite the Ministry of Environment, because clearly, when you start talking about frameworks and regulation, they need to be part of the conversation. So thank you very much, and we can now take our break. Thank you. Something closer home for us, and we'll have our first speaker who will be talking about Lagos flood resilience, and that's a project that we have with the Lagos state, so we'll get to know more about that. And then our second speaker is part of the founding signatories of the Declaration on Sustainable Insurance. He's also a board member of the UNEP PSI, and he'll be just talking about the how the insurance industry can actually integrate ESG in insurance. So I personally think that's a very interesting part of the session today. So They're both joining us online. They're not here today to join us in person. So we'll be listening to them, but I'll make sure that we keep it as participatory. If there are any questions after the sessions, then we'll take those and they will be able to answer. So I'd like to introduce Thomas Weichers. He is the Assistant Director, Risk and Resilience in FSD Africa. He will be discussing the Urban Flood Risk Project. Thank you. As we wait for Thomas to join, I'd like to introduce our next speaker, who will be discussing the integration of the PSI's ESG guidelines in insurance. Dr. Cesar Mwangi is the Chief Executive Officer of the IC Lion Insurance Holdings Group, and he's also a board member of the PSI. And as they actually hosted the Africa Markets event, whereby the declaration was actually launched. So just to introduce Dr. Cesar Mwangi, he will be taking us through that, and if you have any questions, I'll be happy to take them. Those who are online, thank you for joining us. If you have any questions, please add them on the chat, and we will take them and share with Dr. Cesar. Thank you. Please welcome Dr. Cesar Mwangi.
Thank you very much. Thank you very much. And I'm so pleased to be here. It is such a pleasure to see us getting together in Lagos. I would have loved to be there in person. Unfortunately, I could not make it, but thanks to technology, we shall be able to communicate. I was really fascinated and delighted by the previous discussions, very wonderful points of view. I think oscillating from one end of the spectrum of great possibility and great need to another end of the spectrum of we really need so much collaboration to get this done with so many people, and asking the question, can we really do it? Can we get it? Can we make a difference? So I really want to thank the previous panelists, the previous speakers, for very enlightening discussions on this very important issue. I think mine is to bring in a little bit of our experience because as a group, ICLIL group, we signed up to the PSI in 2016. And I believe at that time we were the first African insurer in the East and Central Africa region to sign up. And I think that was a very deliberate decision, which I will share with you why we actually took that decision. And we've also signed up to the Net Zero Insurance Alliance. I think the only African insurance company that has done that. Again, there are very few that have actually signed up. And it is somehow, could I say, a little bit understandable, given the discussions that we've had, that we're still trying to grapple with this, for lack of a better word, elephant, and asking ourselves, how can we really contribute? The comment has been made that we only contribute to 4% of the emissions. So is there any need for us to try and do anything about it? Those questions are there, they're real. But again, I will just take you through some of our thinking. It may help you decide to join in this journey, which I think is a worthwhile journey, personally. So the first thing I want to mention is our group has been around since 1895. 1895. So we're talking about really many years, over close to 130 years. And the fact is, we want to be around not only in 2023, we want to be around in 3033. in 4033, in 5033. In other words, we've got to look to the long term. We've got to look to the long term. And there is a whole possible world for us in that future. So the first thing I think we asked ourselves before engaging in these groups is, why should we had to answer the question, why should we be concerned? Why should we be interested? Why should we sign up to the initiatives that are ongoing around ESG and sustainability issues? And the answer is very simple. If we are long-term thinkers and we believe there is a future for all of us, for that matter, a better future, then we then find in this same environment, we are faced by what is sometimes considered an existential threat, literally an existential threat from climate change, global warming, where, for lack of a better word, we can all be warmed up and burnt to toast, which will end that possible future that we're looking forward to. So yes, we've been around 130 years, but we don't see much going on in the next 130 years because we'll all be eliminated. That for us is clear. And number two, we also realized that we have a choice, okay? We can choose to take some action, but we can also choose to be indifferent and not to take any action and to continue with what we all know is business as usual. Business as usual is basically saying, let us make money now the best way we can. After all, we need to maximize our shareholder returns, which is okay, it's a good thing. And that is business as usual. Or we can make a choice and say, yes, as we make money now and sustain our businesses, we can also think of the long-term future of our businesses, of our planet, of our people. I was very delighted when I heard so many people refer to people, because the world is about people. It's not about things, it's about people and the quality of their lives. And so we went back to ask ourselves a very simple question. What is sustainable development? What is sustainable development? And the answer to that is captured very well in a definition we came across, which says sustainable development is development that meets the needs of the present without compromising the ability of future generations to meet their needs. So we meet our needs in the present, but we don't compromise the ability of future generations to meet their needs. That for us is a no-brainer. And I think in terms of being responsible, therefore, we actually don't have a choice. We don't have a choice in relation to the choice we had to make. And we chose to do something. Now, the biggest fundamental problem with trying to deal with a big problem is that it is easy to say, I will not make a difference, so I'd rather not do anything, and I'd rather not waste my time. And we are trying to do something that is futile. That is an easy option to take. But we chose to say, let us do something about it. After all, there were very good collaborators in other countries who are very keen that we do something about it. And we said, why don't we join them in the bandwagon? And that's how we ended up in the space that we are at, in the principles of sustainable insurance. And we were very happy to also jump on the bandwagon of the Net Zero Insurance Alliance. And yes, we may not change the world overnight, but we will make our contribution. And in the process of aligning ourselves with those progressive voices, which are at times called the lone voices in the wilderness, we will learn something from them because we are operating in the same world as they are. And we are all interested in the same world. So I just wanted to give that as a backdrop because it helps us understand why we do what we do as ICA Lion Group. Now, as we progress on this journey, there are a number of things that have come to light. Number one, we are custodians. Therefore, we have an interest in making sure that our industries, our businesses are sustainable, are sustained. And the way we do that is very simple. We run our business as professionally as possible in order to sustain it. And what do we mean? We price the risks and we charge those risks, because you find there are certain cases where some of the insurance industries do not price the risk correctly. And there is a bit of undercutting in the markets because of the need to get business. But we're saying if we run our businesses professionally and price the risks properly, then we have a sustainable business. Now, we also have a very big reason Why we want a sustainable business? Because we are creating opportunities for many people in our ecosystem to be employed directly and indirectly as agents. We have all the service providers who service the insurance industry. It is so important that we sustain our businesses and grow them, because we sustain a huge ecosystem of people who rely on the entire insurance industry in the ecosystem. So it is important that the first thing we can do as a business is make sure that we have a growing and sustainable business. And for that business to be grow and sustain, we need to run a very well professionally run business, which is what we try, and I'm sure all of you also try to do the same thing. So again, it looks like an obvious thing, but it is part of our sustainability initiatives. Apart from that, we all know that the penetration of insurance is low. We had examples from some of the speakers who say insurance businesses are considered crooks, people who cannot be trusted. Now, of course, there are some maybe who do certain things which cannot be trusted and lead to that perception in the market, in the consumers, that we cannot be trusted. But remember, our weakest link at the end of the day is that colleague business in the market we're operating in that cannot be trusted. That's our weakest link, because we are all affected by our own actions. So another thing we can do is ensure that we don't do anything that compromises trust in the insurance industry. Again, that is about sustainability, because the more trust we have, the more we can sustain our businesses, the more we can increase penetration, the more people can trust us. As we introduce new products, we would do better and better. And I heard about the whole initiative to try and get new products and innovate and get new products, especially for the masses, the micro products, etc. But that has to have a lot of trust. So again, we choose, and we need to choose to do the right thing to enhance trust in our industry. The other thing is the issue of products that are relevant and that are able to reach more people. This was something that has been discussed today. Again, that is the issue of innovation, understanding the market, understanding the emerging needs, issues of affordability. I heard the word behavioral science. Very important to understand who our customers are, how they behave, what are their perceptions, and how they're likely to behave under certain circumstances. Those are the issues that, again, we have to look at. And that is part of sustainability, and everybody can be part of that. Then there is the question of education. I think this has come up. We need to continuously educate people. And there are possible initiatives in schools and universities where education can take place to get people to understand of the role of insurance in the protection of wealth, in the creation of wealth, in the protection against risks that may occur, and understand that these are necessary and not just the compulsory risks. And then there's something which we call practical projects in relation to sustainability. Practical projects, and again, they've been mentioned by the wonderful, wonderful discussions we've had today. Planting of trees, this is a very practical way of saying, let us mitigate against climate change. I think there's an initiative right now in our country where we aim as a business community to plant 2 billion trees, and we want to be part of that initiative and make our contribution. It may seem small, but it will make a difference. And very important, alignment of all stakeholders, government, regulators, all the various players, ecosystem players, industry, through the Net Zero Insurance Alliance, through the PSI. All this is getting like-minded people together to work together so that we can move together and not stand by the wayside and say, the challenge is too big, I better step aside. I hope that has painted a very broad picture. I want to just go to the 5 pillars of the Nairobi Declaration, which we co-created along with various stakeholders, including FSD Africa. And I'm very, very, very grateful for all the support that this declaration has had, including this meeting now in Lagos. There are 5 pillars in this declaration. One of them was risk management, and very practically, we are talking about commitment to advancing assessment, management, and disclosure of climate change-related risks. There is what we call the Financial Stability Board's Task Force on Climate-Related Financial Disclosure. And I think disclosure is very important because it gives a level of transparency. We as a group participated in the TCFD's insurance pilot group. And we are glad we did that because we learned a lot in the process, because we have now started establishing our own, trying to estimate or establish our own ESG risk appetite which we have learned through this process of being involved in this pilot group. We are also measuring and disclosing our carbon emissions as a group. Again, it may seem something very small, given Africa's contribution is very small. Ours is also small, but I say these little bits add up over time. So that's the first thing around risk management. The second is around insurance products and solutions. Now, there has been discussion around various possibilities, and I think it is up to every organization to ask themselves the fundamental questions. Solutions that promote inclusive insurance, that promote solutions for those that need them, require innovation. And I'm sure many of you have set up innovation centers, innovation hubs, and in our own group, we have tried to do that, where we had an innovation center. We have partnered and participated in what we call the BIMA Lab. The BIMA Lab is an insurance regulatory authority-driven innovation laboratory. And we are participating there with the innovators, trying to seek solutions that can contribute to inclusive insurance solutions. We all know the challenge we have at the bottom of the pyramid, the lower end, where there are not many affordable insurance products. But this is industry-led also through our regulator. We also have developed certain products which are highly aligned to the Sustainable Development Goals. And one of them is related to health, where we have partnered with international group, which is able to provide our customers, our clients, with a medical second opinion from the best health providers in the world. So if there's diagnosis that is done in our country here in Kenya, for example, or Uganda or Tanzania where we operate, we're able to get a medical second opinion for our clients from the best facilities in the world, the best doctors in the world. That's what we call medical second opinion. And it is linked to Sustainable Development Goals. We are also very keen on looking for products or solutions that are going to help our farmers. We are currently investigating this. It is not easy, I must say, because of the large number of smallholder farmers and the need for an end-to-end management of that value chain in order to embed insurance in that value chain. There are various initiatives going on in Kenya. We are also looking at possibilities in that regard. Now, we are also looking at the issue of investments, which was part of the Nairobi Declaration. Of course, all insurance companies have an investment portfolio, and part of our contribution in that area is a very simple, straightforward issue where we have invested in Kenya's first green bond. And we are also continuing to explore innovative financial instruments that support a carbon resilient economy. But Kenya as a country has issued a green bond and we've invested in that. The fourth point is on the policy, regulatory and industry engagement. We are most delighted to have been part of the Nairobi Declaration on Sustainable Insurance. We continue to be active in relation to the UNEP PSI, right at the board level, the UNEP Leadership Council, where I sit on as a representative of the industry, and the Net Zero Insurance Alliance. Now, in those gatherings, we are able to exchange ideas and put forward the position of those of us from a different place called Africa, because you find we are underrepresented in many of these forums. But we are able to engage in those forums and put forward the reality of what is happening on the ground and seeking ways of collaboration with some of these collaborators at the international level. Locally, we have collaboration with the Association of Kenya Insurance, who have also signed up to the Nairobi Declaration. We have collaboration with the Organization for East and Southern Africa Insurers, among others, on climate change issues. So we are pushing that pillar of policy, regulatory, and industry engagement. Our regulator was part of the meeting that we held, the market event that we held here, and I'm so delighted. In fact, at that time, we welcomed the regulator from Nigeria into that meeting, the market event that was held where the Nairobi Declaration was launched, and I'm very grateful that we are collaborating at that level also. The fifth one, is what we call sustainable insurance thinking and practices. We have a carbon reduction plan which we have started with our employees. It's a very simple plan, but it has helped them learn that it is good to do something small towards a carbon-free world. And that is a simple program where we incentivize our staff with subsidized loans to acquire solar equipment for their homes, for their farms, so that they can deploy renewable energy solutions through equipment which is subsidized for them, and they have a loan facility with us to get that equipment. We are also looking at water recycling and harvesting solutions, among other solutions, which we are encouraging our staff members to participate in. We also find ourselves very much in various other initiatives promoting this whole issue here in our country, where we have engaged with various insurers, colleagues, not only through the Association of Kenya Insurers, but through articles and discussions and forums which we discuss the issue of sustainable insurance. We had one again that was organized by FSD Africa, where the insurance fraternity was invited here in Nairobi a few weeks ago. My dear friends, one other initiative which I am very glad to mention is we have also looked at the issue of the flood risks, which I am aware that Lagos has been facing, but we also face them here in our tourism-related sector, especially in the Masai Mara, where we have a lot of clients with tourist lodges where they faced a lot of flooding, and now we are looking at solutions for them, where we are getting tools that will help, first of all, forecast the areas of the flooding, and that's a flood mapping that was mentioned earlier, and that can then help these clients to manage that risk better as we insure them. We have faced a number of losses in this area, and then we also have ways of advising them on how best to mitigate those risks, and we are therefore deploying resilience-based climate insurance solutions that use technology, climate science, and data to help not only price these risks, but also to take proactive measures to mitigate those risks. My dear friends, I think I'd like to stop there because of the time allocated, and I welcome the next presentation. Thank you very much.
Thank you very much, Dr. Caesar. I think we can all see that it's possible to practically implement some of these initiatives in our organizations, and perhaps not affecting our bottom line, just taking into consideration the planet and the people and the needs of the people in our communities. So next we are going to have Thomas Waiters, Assistant Director, FSD Africa. He will be taking us through a flood risk initiative that we are currently implementing with the Lagos State. So thank you. Please welcome Thomas.
Yeah, thank you, Zilla. Everyone, thank you very much for giving me the opportunity to speak about an initiative that FSD Africa is now starting with Lagos State government. We are in the very early stages of this, so we are at the stage where agreements with Lagos State government and work plans indeed are being developed. I'm really speaking to you, very much at the outset of something that we hope will make a real impact by bringing the expertise of, well, the insurance sector and indeed the broader financial sector to the problem of flood risk in Lagos State. I would like to share a few slides. Oh, yeah, it seems now I can. Give me a second. Doesn't. Okay, Zilla, maybe you can share the slides from your end, because I'm not able to put them up. Otherwise, I will just speak without slides. Okay. Let me know if. Okay, fine. So as has been mentioned before this morning, flooding is a major issue in Lagos State, and we've heard quite quite well illustrating examples of that from various speakers. So I'm not going to go into details too much on why flooding is important, but I just want to highlight a few challenges that we in discussions with Lagos State government and then also in consulting with various experts have identified. So the one first important thing to keep in mind, and I guess you know all that, flooding in Lagos is of course caused by rain, but it is actually made much more severe by poor infrastructure, in particular when it comes to drainages or management of these drainages, which of course includes also a lack of services, either public services or contracted private services, for example, for waste management, not actually delivering on what they are meant to do in terms of unblocking these drainages or even keeping waste out of drainages. Then secondly, Lagos State government has made in the past few years quite a number of really ambitious and well thought through initiatives when it comes to managing the risk associated with climate change. And that includes, for example, the Climate Action Plan that was developed, I think, 2 years back, and the Lagos Resilience Strategy that the Lagos Resilience Office, which is an office of the government, has come up with. And all these, both these documents, both these strategies do actually talk about the risk of flooding and also identify a few measures that to be taken both at the administration level as well as at the policy level and indeed at the civil society level, which of course includes the financial sector in order to better manage and cope with flood risk. That being said, a number of challenges do remain. One is that the disaster management frameworks in Lagos and indeed in all of Nigeria, so even at the federal level, do not very clearly specify the role of finance or financial instruments when it comes to managing disaster risk. That has, of course, to do also with a lack of technical expertise and both at the government, I would say, as well as at the financial sector to engage with public policy processes and the public administration aspects of things, or vice versa, in how to engage as government with financial services companies and their instruments and business processes. Also, commercial transactions in the investment space, the infrastructure investment space, and indeed in the risk transfer sector are highly complex when it comes to just agreeing on terms that fulfill both the requirements of the government as well as of the commercial players when it comes to designing and actually managing these transactions over the life cycle of, for example, an investment project. That requires, well, first of all, significant resources in terms of manpower, but also a degree of expertise that very often seems to be not there. And then in particular, when it comes to risk transfer, so insurance and similar instruments, there is not so much a lack of data, but a lack of ability to access this data, at least in a cost-effective way, and structure it, well, analyze and structure it in a way that really allows insurance products, for example, to be designed and underwritten by insurers so that they do actually pay out in a timely manner and with amounts that are really impactful for the likes of Lagos State government. So keeping in mind all that, we talked and agreed with Lagos State government a program that would run for 2.5 years and has the title of Urban Resilience Finance in Lagos State. This program was approved by our FSD Africa board and is now in its very early stages of implementation. Our key partner is the Lagos State government, represented by the Office of the Governor, and within that office, the Office of SDGs and Investment. And the objectives of our work over the next 2.5 years are twofold. First objective is to actually develop and adopt a framework, an administrative framework, and most importantly, a policy framework on flood resilience finance that clearly specifies the role of financial instruments in managing disaster risk, in particular flood disaster risk. So that is, as we all know, having such a policy paper formally adopted by government is a key prerequisite for then moving on to actual transactions and partnerships with the commercial sector. The second objective is for us, for this program, to develop and facilitate and realize actually several financial transactions, both in the investment and in the risk transfer space, very much with the aim of, well, certainly to demonstrate that it can be done to invest to align investment in, for example, flood resilient infrastructure with the policy priorities and with, in fact, the analysis of flood risk in Lagos State, but also to source the contingent finance for Lagos State government, which they could draw on in case there is a flood event in a certain local government area or a certain community, and significant financial recovery resources need to be made available, which of course could come from the insurance sector. Now, I would like to emphasize that the commercial aspect here is important for us. So this is not about CSR or indeed subsidized programs from donor agencies, but we think that at least in some cases, commercial players do have a role to play with their expertise, but also, of course, with their limitations when it comes to the commercial aspects of your work, have a role to play in helping Lagos State government and indeed Lagos State to become more flood resilient. So our work will be structured along three major work streams. The first one is to conduct risk assessment and indeed model flood risk, at least to the extent that is necessary for insurers to identify and to be able to structure flood insurance, or for investors to assess whether there is a commercial opportunity in building flood-related or flood-resilient infrastructure in certain locations, in certain local government areas, perhaps in Lagos State. So this work would include, this modeling and analysis of flooding, but most importantly also the economic loss assessment to know what are the financial values that are being lost and which could be insured, or to use this economic loss assessment to prioritize interventions in terms of infrastructure, for example, to cushion the most significant economic losses. The second work stream is to work and support Lagos State government in developing this flood resilience finance policy that I talked about earlier. This includes running a cost-benefit analysis of various financial instruments, be it, of course, insurance, but also the likes of contingent credit lines, insurance-linked securities, bonds, perhaps, and then really help the Lagos State government to understand and decide actually on where their priorities are in terms of financial instruments for flood resilience. Parallel to that, we would also support Lagos State government in reviewing their legal and operational frameworks regarding disaster risk management and the application of finance within these frameworks. And we would, of course, to the extent that is necessary, advise on the formulation and adoption of this policy paper. And the third work stream then is what we call transactions, advisory and facilitation. So we will help to originate opportunities for investment and for risk transfer, but to also apply a criteria framework in order to prioritize and shortlist indeed several transactions, and then deliver the support that is necessary to the parties of this transaction to ensure that they are actually being realized. So that includes, for example, legal advisory. It could include certain assessments of perhaps ESG aspects, or also modeling, financial modeling of investments, and it really will be decided on a case-by-case basis. And underpinning all this is that we will support Lagos state government in building and improving their capacity when it comes to, well, not only understanding, but also managing climate resilience finance within the administration of Lagos State. That capacity building obviously does include an element of training or transferring knowledge, perhaps from locations from within, either within Nigeria or also internationally, where similar projects have been made successful. And we're also offering support in terms of an advisor, an expert who will be based within Lagos state government to coordinate the work on climate resilience finance. So this is an illustration of how the Nairobi Declaration and the expertise of the insurance sector and other financial services players could be made to work for sustainable development and in fact the resolution of a quite severe and significant climate resilience problem in Lagos State. Thank you very much.
Thank you very much, Thomas, for the good presentation. I think we all see that the opportunity is there commercially for us, but also to help Lagos become more resilient. So we are getting closer to the end of our program. We've discussed sustainability issues, sustainable insurance issues. So this will be very short. Elias Omondi, most of you met him yesterday, Senior Manager Risk and Resilience, will be taking us through the actions in the Declaration on Sustainable Insurance. And we will be calling upon the Nigerian insurance industry to join us as African insurance to in this commitment. Yeah, so thank you very much, and please welcome Elias Omondi. Thank you.
Right. I think we are coming to the close of the event, and mine is just to kind of take you through some of the declarations. Now, it's important that we have a shared vision of ending poverty, of rescuing this particular planet, and ideally building a prosperous and a peaceful world. And in kind of putting it even closer home, we want to kind of have a peaceful Africa. Now, as risk managers, particularly the insurers and investors, the African insurance industry has a key role to play in promoting economic, social, and environmental sustainability. And basically, in other words, what we've been discussing closer at the panel discussion was how then do we make this particular idea sustainable development. Now, we know that this particular environment has so many issues that do affect sustainability. One of the key things that we did mention is the ranging climate change, biodiversity loss, and ecosystem degradation, including just issues such as pollution. There are highly issues around human rights violation. There are the issues about poverty and also social inequality. So in these particular veins, and ideally under the auspices of UN environmental principles for sustainable insurance, PSI, we are looking at how basically where we can declare commitment to some of the actions that will enable us achieve some of these particular principles. So for instance, we need to look at issues around risk management, whereby we will be able to advance the assessment and management and disclosure of climate change related risks and opportunities, and ideally build on this particular project that will enable us to have a way that will come up with issues that will help us relate to climate related and financial disclosures. The second component is that we are looking into advancing also assessment, management, and disclosure of environmental, social, and governance issues, governance risks, and opportunities across the lines of business. And ideally, it was quite interesting when we were looking at, okay, fine, we want to basically push these to various lines of business. And in Africa, we have a very, I would say, a very tight choices whereby we can put this across. But it's important for us to make that particular commitment. Importantly, in terms of insurance, we also want to support insurance sustainable development goals, insurance SDGs that have been developed by PSI and harness insurance products and solutions that will enable us achieve these particular SDGs. Also, we want to close the protection gap. We did mention yesterday that the protection gap is barely 2% in Africa, and our premiums are 11-fold down from what their world average is. So we want to actively and in a way put our actions in terms of really promoting an inclusive and innovative insurance solutions that will enable us to achieve and reduce the protection that we are currently experiencing. And I know we've already initiated a number of programs around issues around InsurTech, and also looking at how then we can have nature-based solutions for this particular development. We also want to transition to a resilient net zero emissions within our economy. We did mention that currently across the world there are only 22 insurance companies that are committed to net zero alliance, only one in Africa, and that basically means that we have an opportunity as an industry within this particular side of the continent to commit to net zero alliance, but also just to ensure that our economy is net zero emissions economy. In terms of investment, because the insurance industry is keen to issues around investments, we want to support transition into resilient net zero emissions economy that will build towards the UN convened net zero asset owner alliance. So can we be able to invest on green investments that will ensure that we save our future going forward? Now, we also need to particularly be cognizant that policy, regulatory, and industry engagement is something that has been put at the core, whereby we need to engage with policymakers, regulators, and industry associations on key sustainability issues. We are happy that we've already committed to work with NAICOM, and I think the team at the National Insurance Commission here is keen to ensure that this particular commitment will enable us integrate ESG and sustainable development issues across this particular industry. Just to conclude, sustainable insurance thinking and practices is something that we need to bring to the fore, whereby we need to promote the adoption and implementation of 4 principles for sustainable insurance across Africa insurance markets. We need to enhance knowledge, capacity for the insurance industry in Africa for sustainable insurance, and that was highly highlighted during the panel discussions, whereby we are looking at how then do we ensure that we are fully aware and we create awareness within the insurance ecosystem on issues around sustainability. Just to end, we need to shape the sustainable insurance agenda in Africa and strengthen the global effort of ensuring for sustainable development. So we are calling us to join this particular course because for us to ensure that Africa will not become 30% poorer by 2050, we need to take this particular bull by its horns. We have to work together, and ideally, I really like the way Kasim ended, that we need to be competitive but also collaborative. So we need to launch a coalition of industry champions that will stand at the front, but also just to look at the people that will also be able to collaborate and work together and cooperate in terms of ensuring that we are going to create a sustainable world. And also, we need to create a sustainable Africa. Thank you very much, and enjoy the rest of the evening. Thank you.
Thank you very much, Elias. I think we can now all see that it's not something new. We've been discussing this all day. And at this moment, I would like to call upon all of you today to join us in regards to signing on to the Nairobi Declaration on Sustainable Insurance as FSD Africa, we are keen on action, not just commitments. So let's come together, let's work together to help our communities adapt to the climate change issues, and let's learn from each other as well. So moving forward, as you know, we already have some projects ongoing in Nigeria, but we would like to support you better. We would like to work together to actually actualize this and not just make commitments. So we are all at different stages, and this is not a legally binding commitment. It's a commitment as an industry, as a company that you consider sustainable insurance, and you're doing, you're in that journey with us, in the sustainable insurance journey. So thank you very much. Just before I call on to NAICOM to share the vote of thanks, I would like to request for a photo. All the speakers who've been able to speak today, it would be good to just have a quick photo. NAICOM team, anyone who is here from FSD Africa, and all the speakers who've been able to speak today, could you kindly come up for a quick photo, and then, yeah, we'll have the vote of thanks from NAICOM. Thank you. So I'll stay on the stage as I... Aditola. So, Habi Lamos, I'd like to call you back up to give a vote of thanks. Meeting. Thank you very much all, and I really appreciate everyone who's made it and who stayed here till the end. So, Habi Lamos, you're welcome. Please help me welcome him to the stage.
Good afternoon, all. My task is to say a word of appreciation to everyone for making this event the success that it has been these last 2 days. And so to FSD Africa, the team ably led by the Chief Executive, Mr. Mark Napier, the UK Aid, and the UN Environment Programme, we say a big thank you for making this event to happen. To all other regulators that are here from other African countries, we say thank you. We appreciate your coming. We appreciate your participation in this particular event. To the Chartered Insurance Institute of Nigeria, CI, grateful. To all the chief executives of insurance institutions that are here, this event a success. All other stakeholders that have been here with us for this event, we appreciate you for your presence. We will not forget the members of the press for the effective coverage you've given this event. We say a big thank you. The organizers, the crew, everyone that has worked behind the scene assiduously to make this 2 days a success, we say a big thank you from NAICOM. We really appreciate your time and input. All others who have participated in one way or the other. We thank you. Thank you all for investing your time, spending time here in the last 2 days. We appreciate everyone. And we wish everyone a safe journey to your destinations, both local and foreign, even as we look forward to seeing you again the next time we call. Thank you so very much, and God bless us all. Thank you.
Thank you very much. Lunch is served. As you're getting your lunch, there's a link there where you can link up and discuss more about the declaration and sign up. But you're welcome. The lunch is right outside. So, yeah, thank you very much.